Timothy Piper has become a member.
Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's a special today, an NVIDIA special, so it's a lot to cover. Let me just stop the lights now. We don't need the lights anymore. We'll stop all of that, and we'll bring everything back centered again. It is a special because I'm about to bring you a very exclusive Pro Plan event, which, unless you are a Pro Plan customer of Seeking Alpha, you cannot get this. I am, so of course I'm bringing it to my viewers this afternoon. We're going to be in and out of members only. We have to focus on giving our members the best service. So if we get lots of questions and too busy, we'll go back to our members only again. And we can even switch the event to a midstream to a members only live stream as well, only viewable by members. So if it gets too busy, too many questions from too many people, our focus is always has been, always will be about providing the best service for our members, not growing the biggest YouTube channel in the world. We want the best YouTube channel, not the biggest, okay? Well, what's happening is this. We have got, in a few days' time, we have got the earnings, okay? So you all know about this. It's going to be a major event on our channel, of course. We're covering the, oops-a-daisy, what's happened there? Let me just change that screen there. We've just, mid-show, changed screens. Let me just change that to that screen there. That's better. In a couple of days' time, we have got this event here on the 20, in fact, 8 days' time, the 28th. The link is pinned into the chat. I'll give it to you here. This is the NVIDIA earnings, and this is probably the most important earnings in a decade, because if we do believe what we believe, that the AI revolution is just getting started, this is the one just before the policy change with the Fed. So this is probably one of the most important earnings of a decade. So we're going to cover that, but in a few minutes' time, we're going to go over to an exclusive pro event that, unless you are a pro customer of Seeking Alpha, like I am, you won't be able to listen in. But I'm going to share it with you so you can all learn. And I think this is really important because we're going to learn from the Vice President of quantitative strategy at Seeking Alpha about NVIDIA, the Mag 7. Where we see the markets going, preparing for the earnings. It's a live Zoom event, which I'm going to broadcast. This is the event here. I've got permission to broadcast this. It's a special event, which again, as I say, you cannot hear or be part of unless you are a customer at Seeking Alpha. So I do actually have, if anyone is interested, as you know, I never take corporate sponsorship. I only have members who are sponsors. I don't take money from crypto companies. No one can ever offer me money to promote stuff. I don't ever do it. I'm always about the members. That's it. So I've been given a plan, which I was told, and I negotiated to make sure it was better than anyone else, or at least the best that anyone can have. And this is it. If you want to access Seeking Alpha like I have, and you can then watch this, yourself and many other things, there is the Seeking Alpha link in the chat. Not only do you get $25 off, which is great, you also get a free trial. You can't get that without a referral link, and that's the best deal you can get. So if you're interested, go and check that out, and you can get access to that. Right, we've got just a few minutes to go before this special event starts. I'll give you a little taster of what we're going to hear about. Let me just read this out to you. This is the description of the seminar we're going to get. As the unsinkable stocks, in fact, I'll bring it up here so you can actually see what I'm reading from. Okay. As the unsinkable stocks of the Magnificent Seven, of course, including NVIDIA, right at the top of that, scramble to recoup from substantial losses, which they have had. This was written, obviously, 2 weeks ago. Many investors are wondering what the future holds for these Titan companies. Join our Vice President of Quantitative Strategy, Stephen Kress, as we dig deeper into the widespread sell-off of and explore the possibilities still ahead. He will also address recession fears and talk about the impact the election could have on future earnings. All these stocks will be a safe haven for the investors. Register now for Stephen's in-depth analysis for the future of the Magnificent Seven. Okay, so that's coming up in a minute. Now, we are open at the moment. General public can communicate. We may turn that off again if we get too busy. But if you are a general customer, a general viewer, a subscriber, you can comment. We're also going to open up the phone line as well. You can actually phone in, be on the show, ask questions. We're also going to look at the analysis for NVIDIA, giving you the intrinsic valuations in a very visual way. If you like this service, this is the software that I use. One of my friends is the CEO, and it enables me to offer you this service for free. If you want the pro plan, the discount you get basically makes my membership for free. That's how good that is. That's because I know the CEO. There's alpha spread. We're going to look at all of this during the call. I'm sure we'll cover these numbers and all the rest of it. So let me welcome everybody in. Let's see how many people we got here right now. We've got 98 just tuned in. Now then, if we can get 100 likes, YouTube will suggest this video out to more people, and we can spread the word about NVIDIA. More people can take advantage of this pro service you couldn't hear unless you were a customer of Seeking Alpha. So let's see if we can get it up to 100. You ready? Okay, let's go over to this screen. Let's see if we can do it. There's 97 watching, 27 likes. If we get 100, then we can get suggested out. You ready? Okay, 22. You ready? Okay. Everyone tap the like button. We want the world to learn about NVIDIA. I strongly believe that we've got a $200 stock, 130, 140 on earnings, and then over the next 12 months, 200. So here we go. In 5, 4, 3, 2, 1. 32. Not too bad. Now, I don't expect to get 100 straight away because our India audience, for some reason, never sign into Google. They're not signed into Google. So 50, the most we could get is about 52. For some reason, people in India never sign into Google. Always been bewildered why that is. Anyway, 32. 5, 4, 3, 2, 1. Let's see if we can get up to 51. There we go. There you go, 51. I doubt if we can get much higher with the viewers we've got at the moment. This is great because YouTube will suggest this out when we get to 100. More people can learn about NVIDIA. So 5, 4, 3, 2, 1. Okay, how are we doing now? 56. That's pretty good. We'll come back to that in a minute. Thank you ever so much, everybody. 116. So we should do that in a few moments. Right. Now then, so if you've just tuned in, it's an NVIDIA special this afternoon. We're about to ring the bell in 20 minutes. We've got analysis from my alpha spread we're going to share with you during the call. We're going to hear from a panel from Seeking Alpha discussing NVIDIA and the Mag 7 just in time for the earnings as a live Zoom call. Really, really good. Stacey Bailey says 67 now. We're nearly at 100. Great. There's Alpha Spread in the chat if you want it. If you want Seeking Alpha, I've got a great deal here. $25 off and a free trial. I recommend everyone just get the free trial. Whatever you do, you might as well. Now then, just before we got just a few minutes ago before the call starts, I've got something else really cool as well. I think this is really, really exciting. So here we go. If you are in the UK or the US, if you click on this link here, you'll get free stocks from Robinhood, up 5 up to 175. But here's something I'm doing myself. I am going to pay for 4 months of your gold membership on Robinhood. Just a little gift from me. All right. I need 2 more people to use my referral so I get the solid gold credit card. It's about $1,000 worth, something like that. 1,000, 2,000. It's like debatable, right? I'm going to melt it down if I get it, all right, and just put the money into my stockpile. But into the stock market. Didn't mean stockpile. You know what I mean. Anyway, so I've got a little link here. Where is it? Where is my little gold link? Where is it? Here it is. Here it is. Now, if you are on Robinhood or you're not on Robinhood in the US, it doesn't matter. You can use this. You can either get Robinhood Gold or you can get get it. You know, if you already are a customer, you can upgrade. All right. Now, this is how it works. Here's the link. If you become a Robinhood Gold customer, all right, or if you're not on Robinhood and you get Robinhood and you go gold, you've got to be gold for at least a month. Take a photograph of my link and share and message me later. I need 2 more people. When I get 2 more people, I will tell you I've now got the Robinhood Gold card. They're going to send it out. When they send it out, I'll show it on the screen. I'll share with you. And everybody, I need 10 people. I need 2 more. Everybody that helped me get there, the first 10 that did it, by sending me in the link, and we can see the dates and everything, I'm going to send you the cash to pay for 4 months gold plan. So basically, I'm going to pay your gold plan for you for 4 months. All right, pretty cool, right? But to qualify for that, I have to get 2 more. So I have to get enough people to do it. So I get the gold card, then I can melt it down and send you all the money. Right? Makes sense? But I also need you to, prove it was you by sending an image in. We'll give you a Discord link later on once we've done it. And then I will pay the first 10 people that did it. So I'm basically going to pay your gold membership. So I'm going to get a bit and I'm just going to share it back to you. So there is the link. I'll give it to you one more time. You might as well do it. If you are, I'll just tell you now, I use Robinhood Gold. You can see there's my gold account. I have Robinhood Gold. It's fantastic. I use it. There's no reason why I wouldn't use it. It pays for itself 100 times over. If you only put $10 in Robinhood, it's not really worth it. If you don't use any of the features, it isn't worth it. But if you do if you use either margin, if you use uninvested cash earnings, if you're applying for the gold card, if you're doing the 1% match, if you're doing the Roth IRA, 3%, any one of those things, it pays for itself. I use all those features. So for me, it pays for itself over and over again. The margin rate is lower. The 1% cash back, the 3% match. It goes on and on and on. There's loads of benefits to it. Plus the gold card, 3% cash back. It goes on forever. So anyway, there's the link in the chat. You've all got that now. Anyway, we've got, how long have we got now? 15 minutes to go before this special event. So let's have a look. How many likes have we got now? Let's do it. Let's have a look. Have we got 100 yet? We want YouTube to share this out. We do rank number 1 in the world for NVIDIA on YouTube. At least we did a couple of days ago. I haven't checked today. It sort of changes all the time. Okay, here, we ready? All right, we've got 124 watching. So the most really we could have is about 60 because 50% aren't signed in unless everyone's signed in today, which would be the first ever. 56 likes. Let's see if we can get up to 60. 5, 4, 3, 2, 1. 85. Bloody hell. That's fantastic. 85. 15 to go and YouTube will suggest this out. Should we go again? In 5, 4, 3, 2, 1. Let's go. Okay, let's have a look. 83. It went down to. I should probably quit while I'm ahead then. All right, never mind. There's always some clown. We always get like 1% of clowns on the show. Happens every day. There's always like 1% of trolls and stuff like that. Right, we've got 14 minutes to go now before this special event starts. It's an event you can get if you're a pro plan customer of Seeking Alpha. I am. So I'm able to share it with you today. I'm going to share this broadcast with you so we can all listen and get prepared for the earnings. I thought it was really worth presenting this to you today on this Zoom call. So I'm looking forward to it. It should be a really great call. All right, we're going to learn a lot. Now then, we've got 13 minutes to go. So just before we get to the call, I am going to also do analysis. So let me give you these links here. Here is the gold card. We need 2 more people to do it. and you need to be gold for 2 months or 1 month, and then send the link in and I will obviously reimburse you. For 4 months, I'll pay for it. There's the gold card. If you want Seeking Alpha, like what I use to review stocks, and you want it $25 cheaper and you want a 7-day trial, there is the link for that. And here is Alpha Spread, which I also use, and you can get this for free. Or if you're a member of mine, you can basically get it for free, even the Pro plan, because the membership discount is that good. All right, so there you go. There's all the bits and bobs you need. Okay. Now then, I got a message. What about in the UK? Robinhood in the UK. Well, I do have a Robinhood UK account. So if I give you this link here, if you are in the UK, because I have a UK account as well, if you click on that, you'll get some free stocks right now. I will also get free stocks, and I'll share with you what I've got. Right, we got 12 minutes to go. We're nearly at the time. So just before I get there, this is now to my Lucas Aids, my members, NVIDIA investors. This is not for scammers and bots and trolls. This is for decent people, investors. I say that because what I'm about to do always invites trolls in. And they seem to think it's funny to do bad stuff. Well, that's all right. But, you know, I'm just thankful that most people are decent people. So what we're going to do is this. Just before we go into the presentation, some of you know or don't know, I was voted as the world piano man by Sir Elton John. If you look on my music channel, you can see me with my Vegas show. This is me here. I did a Vegas show with the British Philharmonic Orchestra. We've got showgirls, and I've got all sorts of things. I did Lion King. I did the Phantom of the Opera. I did all these things you can see on my channel, whatever. But I've raised lots of money over the years for charity. But what I want to do now is teaming up with YouTube, raise millions now. 2 years ago, I did the Global Telethon for the Lions Club. But there was always costs involved. There was always fees and charges and stuff like that. So this is what I want to do. We are currently on 6,161 subscribers. All right. If we get to 10,000 subscribers, YouTube turn on YouTube charitable giving. It enables me to do free shows, free concerts, ad revenue, super chats, memberships. Everything goes to your favorite charity. And I mean your favorite charity. Okay, so what I'm going to ask you now is a special favor. Doesn't benefit me other than it gives me pleasure. I do all the concerts for free. There are no fees, no charges, no taxes, no credit cards. You can even claim back on your tax because it's a registered charity. If you subscribe to me, you don't have to watch, you don't have to listen, you don't have to join my shows on a Friday. Every Friday we do a concert. You don't have to listen to my music. You don't have to tip. You don't have to do anything. Just subscribe to get me to 10,000 subscribers. If you do that, here is the link. There is my link right now. If you do that, I'll give it you 4 times so you can see it stand out. If you do that right now, we got 10 minutes to go before the event starts. That will roll round. But here's what's really cool. I believe in good karma. I believe in doing good things. Always brings back. It's always worked for me. Making money is easy for me. The hard part is to keep it. If you take care of others, things always work out. I've always believed that. It's why I'm always live, why I always do these shows to help people. It's not about me, it's about others. If you click subscribe right now and that rolls round, everyone counts towards the 10,000. If you get all your friends and family, whatever, to do it, come back to me, message me and say, Martyn, we got all our family at work, all our colleagues at school, or whatever it might be, to subscribe to you. You're now at 10,000. Could you do one of our favorite charities, please? And I'll say, yeah. And I'll do it in your name. You might say, hey, you know, everybody works at XYZ business. We love helping cancer research, or we love helping children, or we love helping people in war zones, or whatever it might be. I will do it for you. And the money goes directly to the charity. I mean, when you set it up, at the bottom of the video, it actually says, I've got people that I've got a couple of idiots here. Let's see, they're down liking my show. You always get a couple of trolls and horrible people, and you know, whatever. There's always, if there wasn't a few idiots in the world, we wouldn't have people like Adolf Hitler, and we wouldn't have Vladimir Putin, would we? There's always idiots. But anyway, for all the decent people out there, it links to a registered charity, your registered charity. So if you've got a registered charity, or one that you like, on the video, the live stream, it will say this show on YouTube, this show is connected to cancer research. So I don't get anything from it. I can't get anything from it. I just do the concert and it just works. And the charity get all the money, and YouTube take no fees, no commission. So I'm flabbergasted it hasn't rolled around right now. Hopefully it will in a minute. Why everybody wouldn't click on it, I don't know. We've got, how many people are sitting here right now? We've got 121 wealthy investors, and all you've got to do is click on that, and it will roll round, and then you can ask me to do a fundraiser for your charity, for your thing that you care about. And I just think it's a good thing, right? You might, obviously, some of you disagree. I'm not doing it. All right, and don't forget, if you subscribe but you don't want to hear about my music, you can turn off notifications if you don't want to be emailed when I go live. But just help me get to 10,000 so we can do good work. All right? Okay, I'll come back to that. Hopefully it will move around a little bit. But we've got 117 people here today. I've no idea why everybody wouldn't subscribe, but there you go. I'm always confused by people. Right. Anyway, here is one of our registered charities. This is Development Alert Uganda, who is based in Uganda. They are a registered charity on YouTube. We will be feeding and helping people in Uganda with clean, fresh water for free, just by you subscribing. I mean, literally for free. So anyway, as you can see, Zach is going, smash the like, help us out. It's free. It doesn't cost anything. Anyway, right, we've got 8 minutes to go. We're just about ready to go. Thank you for anyone if you are considering doing it. I'll have a look in a minute. I'll see if it rolled round. I'm sure there's one person who wants to help out. Anyway, let's get ready. We've got 7 minutes to go. If you've just tuned in fact, let me just check my email, because if anybody has done the gold membership, it normally comes through by the end of the day. Not yet. It normally takes by the end of the day, but I'll let you know if I get down to the last one. Or we've been at the last one a couple of times, and then people just don't keep their gold membership for more than a few days, and it just drops off again. So we're back down to 2 again. We're just so close from me being able to give all that money away. Anyway, let's bring all the comments on the screen. Let's have a look. Okay, we've got a bit of an idiot in here. NVIDIA is going to 0. Taiwan going to doesn't even, your grammar doesn't even make sense. World War III. You don't understand history. You don't know how the world works. You can't spell. Your grammar's awful. You even call yourself a scamming service, which is a bit weird. Anyway, bloody hell. That's a bit bonkers, isn't it? Anyway, you do what you like. World War III isn't going to happen. Meet Kevin keeps saying World War III is going to happen every 5 minutes because it sells videos. I understand history. I went all the way in history, unlike Meet Kevin, who just makes up silly facts. We're not going into World War III. It makes no sense. World War I and World War II made sense if you are if you're Adolf Hitler, it does anyway. But for people today, it makes absolutely no sense. Even for those aggressors, it just wouldn't make any. They wouldn't do it. World War III, not because we're all going to drop bombs on each other, because economically we rely on each other. So we can have an accident, but it's just not going to happen. So those who are saying I'm not going to buy NVIDIA because World War III would start, first of all, it's stupid, because World War III will make no difference to your Robinhood account. It's absolutely bonkers. You've got bigger problems to worry about. Which is why people always trade and they don't understand what they're doing. I started with $5,000, right? I've never shorted a stock. I've never done options. I'm at 109,302. I think you'll all agree I've done pretty well, right? 5,000, I'm now at 109,298. Never done options, never shorted a stock. Always stay invested, always be optimistic, always work hard, and life is easy. I honestly believe that. Take care of other people and it's easy. Anyway, 5 minutes to go. 5 minutes ago before this call begins. Let's look at NVIDIA. Let me look at my stocks today. We are down a little bit today. Why are we down? Well, no particular reason, actually. I'm hardly down at all. It's nothing, is it? We're at an all-time high again today. We have got Jackson Hole on Friday. We're going to cover it live. It's going to be a non-event. Jerome Powell, we're going to be listening into what he says in between the lines. That's very, very important. But we're going to get rate cuts. I said 18 months ago in the summer of 24 would get rate cuts. 3 months ago, I said we'd get rate cuts of 0.5%. All of that is going to happen. But it's going to be happening in September. And that's good. We don't want a knee-jerk reaction. We don't need it. The American economy is strong. Yes, the American economy is up to its eyeballs in debt and everybody's borrowing money on their credit cards, and that's terrible. But the American economy is not the American stock market. When you're getting poor, saying the world is difficult and your credit card bills are out of control, they might be. They might be, but the rich get richer, okay? The stock market is not representation of your economy at home. So, don't be too concerned about that. Anyway, I cannot believe we didn't get one more subscriber. I can't believe that. That's the first time it's ever happened. I don't know why that would be. I'm trying my best, Zach, to help you in Africa and everybody else. I just don't understand people. It's just so strange. Anyway, there's the link again, folks. Let's see if somebody can roll that round one more. I get so frustrated because doing good is the secret of everything. And I don't know why everyone doesn't want to bring positivity into the world. I've never understood it. Anyway, that's just me. Right, 3% to go now. Oh, we just got one. We just got one. Right. Now, that person who just subscribed, thank you so much. Don't forget, message me when we get 10,000 and say what charity you want me to support, and I will do a concert for free in your name. It'd be great if you get all your family and friends, not just one, but I will do it. And we'll do concerts all the time for everybody that helped us do it. And the money will go directly, the super chat, the ad revenue, everything will go to your charity. I'll do all the work for free. All you've done is click that button. That's it. And if you don't want to hear from me, if you don't want to hear about I'm going live on Friday for a concert, just turn off notifications and you'll never hear from me again. But at least we're one step forward to getting the YouTube giving. It's a feature that I have on this channel, but I don't want to do concerts on this channel. Everybody would unsubscribe going, what's going on? I'm sure you can understand that. Right. The presentation is 2 minutes away. This is the event. It's a special Seeking Alpha Pro event. You can't normally get this. I'm providing it for my viewers and my members. We're about to ring the bell, and we're going to listen in about the Magnificent Seven, where we might expect to see earnings go. It's a really important call, and it's 8 days before the event. So I think it's a really, really important event, this. So we're just a few seconds away. So let me just give you once again, if you are from the UK, there is your Robinhood free stocks. There you go. What else can I give you? If you are in the USA, here's your free link. There you go, free stocks for you. We will go members only again in a moment, just so I can make sure we answer everyone's questions. We're getting too many questions now. I can't see them all. So here is Alpha Spread. If you want to use the software that I use for free. Okay, there you go. Here is and a discount if you want it. Here's Seeking Alpha. You can try it for free and get $25 off. It's the best deal possible. There you go. Right, what did we get the likes up to? Let's have a look. 151 watching, 84 likes. Let's see. We've got 30 seconds to go. If we get over 100, YouTube will start suggesting it out, and more people will learn about 96. Just 4 away. Tap the like button, guys. Get to 100. YouTube will share it out. This is a piece of information you can't get unless you are a pro plan on Seeking Alpha. I'm bringing this to you. Thank you, Leah, for my tea. I'm bringing you this 96. Okay, the call's about to start. Hopefully we'll get to 100. But what's important now is going over to the call. We will go members only, so we can do the phone in at the end and do all those extra reviews. Okay, so here we go. Let's tune in now. Here we go. Let's tune in. Let me unmute this. Okay, we're all good. So it will start any moment now. Owning NVIDIA is asking for trouble right now. No, that makes no sense at all. Just subscribe. Oh, thank you, Stacey Bailey. Did we get it to move one more? Oh, that was you, was it, who subscribed? Thank you, Stacey Bailey. Thanks, Leah. Right. Oh, here we go.
Antonia de la Cruz donated $4.99 to a super chat. Martyn, do you believe NVIDIA will soar after
today to dive deep into the Mag 7 stocks? Obviously, we've all watched them. I'm sure a lot of you might even have them in your portfolio or on a watch list, and you're going, what do I do with them now? We've seen the run up. We've seen volatility. What comes next? Well, today we're here to discuss all of that. So thank you for tuning in. Stick around for the hour, hang out, grab a cup of coffee and enjoy. And before we dive into all the nitty gritty, let's go ahead and get some housekeeping out of the way. Steve, if you don't mind going to that next slide, I'll read the legal disclaimer and we'll move on. We are not advising you personally concerning the nature, potential value, or suitability of any particular security.
We don't have any slides, guys.
For determining whether any investment, security, or strategy, or any product or service is appropriate or suitable for you based on your investment objectives and personal and financial situation. Past performance is no guarantee of future results. Seeking Alpha is not a licensed securities dealer, broker, or U.S. investment advisor or investment bank. And with that out of the way, and everybody's here in the chat, Steve, who are you? I mean, I know you, but obviously the slide. Who are you? Why don't you go ahead and give these people a little bit of background of what you have done in your past and where you are today?
Absolutely, Daniel. Thanks for arranging this today. I think it's going to be a great webinar. We have a lot of really interesting slides that will not only speak to the Magnificent Seven, but the overall economy and the
They're not showing any slides.
So I think it'll be a pretty exciting and informative presentation. A little bit of background on myself. I joined Seeking Alpha about 5 years ago. Seeking Alpha purchased my company, Crescap Investment Research. For lack of a better description at Crescap Investment Research, we created a platform that was a robo-analyst, giving people the ability to put any ticker symbol in the world in and have an instantaneous research report that would be refreshed every single day. So that's when I joined Seeking Alpha about 5 years ago. Prior to that, I had a hedge fund in quantitative strategies, and the bulk of my career was spent at Morgan Stanley, where I ran a prop desk in quantitative strategies. So I've been living and breathing the financial markets for well over 30 years. And I have to say, this is one of the most exciting parts, Daniel. I've really enjoyed my time at Seeking Alpha. And
I'm just going to refresh this to see if they bring up the slides. They're not showing any slides. Just bear with me. I'm just going to refresh the screen. No, they're not. They're not showing any slides.
People are either fearful or being greedy or don't know what to do. The quant vision is to eliminate emotional investing and uncover top stocks using data-driven tactics, especially in periods like now. In turbulent times, amid market volatility, quant eliminates the fear and focuses on the fundamentals. And it is a data-driven process, and we squarely try to get people to focus on the fundamentals and not the talking heads on Bloomberg or CNBC or what you're seeing in the newspapers. We want them to follow the data and let that tell the story. So our quant performance has been pretty good. I'll show you some charts that display our track record since 2010. And many of the people on the webinar today are familiar with the product that we created 2 years ago called AlphaFix. That's had outstanding performance as well. So I'm going to tell you a little bit what's behind quant. Sometimes people get nervous when they hear the word quant. They think it's very mathematics.
I've got a better version.
Quant is what
Here we go.
Every investment analyst does. It's basic fundamentals, but we employ the power of computer processing.
Here we go.
Can take a look at thousands and thousands of companies at one time, and we will score their balance sheets, their income statements, their cash flow statements, and hundreds of metrics. And when we score them, we try to compare each stock relative to the sector median for those comparable companies. So I refer to it really as quantamental analysis, the quant being the computer process part, and the ending portion there comes from fundamental analysis, because it's really conventional fundamental analysis. What every research analyst does is they take a look at the company, they look at the valuation framework, they look at the growth, they look at the profitability, and they try to assess those companies compared to the sectors. Seeking Alpha, we've created an algorithm to do that. So instead of having to rely on individual analysts, we take those same methodologies and strategies, we created an algo for it, and it gives us the ability to sort through thousands of stocks on a daily basis. And really, up every day, we can provide a fresh directional recommendation for each stock, a buy, sell, or hold, based on how those financials look. So what we really look at, our core metrics are growth, profitability, value, EPS revisions, and momentum. And
we're going to be coming on to NVIDIA and all the stocks in a few moments. Please bear with us.
Sector medians. Hence, it gives us the ability to measure the strength or weakness of a company versus its sector. And the companies that are stronger become strong buys. And what we tend to do is we want to make it really transparent. When we're looking at those core metrics, we assign academic letter grades, A+ through F. So when somebody looks at it, they instantly know what a company's value, growth, or profitability looks like versus the sector. So it's been a really interesting market that we're in, Daniel. We've seen almost 10% swings down, 10% swings up. Market's been all over the place over the last 4 weeks. So some of the headlines that we saw as of August 5th, about 2 weeks ago, when I came into the office on Monday, these were some of the core headlines. Market was getting crushed, and we saw the Fed is not coming to the rescue. We saw another headline, S&P 500, this could get ugly. This is one I really liked. Baby boomers better get out of the stock market now. A lot of fearful headlines. That was obviously a great day to buy the market when these headlines were coming out, because it pretty much bottomed that day coming off of a fearful Friday. And Monday was ugly, but by the end of Monday, it really turned around. So sometimes a picture is worth 1,000 words. This was the volatility that we've actually have seen over the last 3 months, with the market climbing from June to July. And we saw a rotation during that period that we did not see earlier in the year. There was a rotation back into the Magnificent Seven. So those stocks, which have performed so incredibly well during 2023, actually had lagged during the first part of 2024. But there was a major rotation that took place. I'm going to go over why that rotation occurred. And then, of course, when we were at mid-July, that was the peak. And then it looked like the world was unwinding from there, only for it to rally back significantly. So it's been all over the place. What I particularly like is the VIX, which measures volatility. It was absolutely insane. You and I were talking about this on that Monday morning, how the VIX had gone over 60, and we hadn't seen that since the great financial crisis or the pandemic. And what was just crazy is that, the numbers that came out that day were really not eventful, but it just really spooked the market. And, it was a culmination of seeing economic uncertainty, slower job growth, anxiety over the U.S. election coming up in November, concerns over the timing and impact of
coming on to Mag 7 in a moment, guys.
And investors really
don't download the video. We're about to give you what you came for
during that period.
Have some patience.
All that happening in a 2-day trading period led the VIX to surge over 60. But of course, when people looked at the data, they're like, "This is ridiculous. There's no reason for the VIX to be surging here."
You have to understand the market to buy NVIDIA.
People started piling back into the market, and the VIX came back down.
Yeah, Steve, real quick, I do want to mention, I'm going to drop that webinar replay into the chat and underneath the replay of this webinar for anybody that wants to go back and look at that. When we did that webinar on August 5th, pointing out how unusual this is and how it didn't make sense because it was all in the data.
It is. And you and I were out there just telling everybody to just stay calm, carry on. And we gave them great advice, especially considering all those headlines that we saw that morning that were just completely scaremongering. It was insane. But, we made the right choice by doing the webinar that day. And some people really profited by paying attention to what our recommendations were. So there is still reason to be concerned, Daniel, though. We are in a tricky time of year. We have all those issues ever present in the market right now between inflation, interest rates, geopolitical events between Ukraine and Israel, and the election coming up. And then, of course, we have sort of a seasonal pattern, September, where the market has traditionally been very weak. This exhibit shows what it's been like for the last 10 years. And you can see what the win rate is on the very top line there. And when you get to September, you can see the win rate is only 30%. So that means over the last 10 years, it's actually been down 70% of the time.
Pay no attention to that.
So it's just seasonally a weak period. And, we have that coming up with all these other events. So there is still reason to be cautious. Some of those numbers that I mentioned before, which really were not that bad, which made the VIX spike, we saw that the non-farm payrolls grew by 114,000. The expectation was 179,000. So the market, non-farm payroll still grew. So it was really amazing.
All the comments with a
reacted that day.
Badge are our members, just so you understand who our members are.
Which, yes, is the highest since
we verify
October
all the comments.
But people should know full employment in the United States is actually between 4% and 5%. So for the markets to react, that volatility to a slight increase to 4.3%, again, it really did not make any sense. And if anything, the average hourly earnings increased 0.2%. And as many people know, the biggest component of inflation is labor, and we actually saw wages increasing there. So there were a number of things that were scaring the market then. We kind of covered it. But of course, these data points really were not enough to make the market react as negatively.
I'll cover that at the end.
And this sort of just highlights it again. We're looking at the VIX here. We're looking at full employment, being between 4 and 5%, and that number 4.3% really not being that scary. So it did not look like it was a systematic risk issue. You and I sort of came out and said that on that Monday, and certainly the VIX came right back down. Definitely not a day worthy of the VIX jumping 360%, I should say, over a 4-week period. Daniel, this is one that you actually sent my way. I really love this. Why don't you take this one?
Yeah, so pretty much what we were talking about here, and I don't think we followed up with the other image I had associated with this, and that's in the previous webinar. So
there will not be a recession in 2024.
A gentleman who studied macroeconomics, and he came up with this inversion of the yield curve, which you may have heard about time and time again. And we're talking about the 2-year yield versus the 10-year yield. And when that is inverted, it's kind of a caution sign in the bond market saying that they're thinking that a recession is coming. And everybody watches this because typically when it flips back, meaning that the 2-year yield is below the 10-year yield, giving you a positive sloping graph, that is typically when a recession starts. Now, we don't really know at that moment in time if a recession has started. Obviously, that is kind of given hindsight by the NBER. But this is kind of something that everybody wants to keep their eyes on right now because they're saying, oh, well, maybe this is the thing that signals that the recession is happening. The one thing to note about this that the media doesn't always cover, though, is the gentleman that discovered this has actually said that this time might be different. And he admits that he is on the record saying that this time is different. And that's why everybody is watching this, specifically the 2 and 10-year yield inverted.
Yeah, and as you can actually see on this, the shaded orange areas are the period of recession, and you can see the line graph is definitely higher for the most part during those periods, where right now it's not close to those levels. So it looks like there could be some weakness in the economy, but it looks like it's due, if it's going to be a recession, looks like it's going to be due for a very soft recession if that happens. And we're going to be prepared for that, and that's the point of this webinar today, is getting people prepared for that uncertainty. I think this is really interesting because there is so much focus on the first Fed rate cut, and this table actually shows you that the market moves down just prior to that first rate cut. And I think a lot of people are under the impression that the market does really well with the first rate cut. So if you were to look at this on an average of 276 days from the first rate cut, the market actually declined 20.5%. But the thing that is very reassuring here is the 6-month return after the first cut. You can see it's positive 3.4%. So it is not uncommon going into the rate cut when there's a lot of nervousness, to the extent that a recession might take place, or what inflation numbers will be, or the movement of the actual rate cut will be 25 basis points, will be 75 basis point. A lot of uncertainty. And markets do not like uncertainty, hence they come down. And that's what we're seeing exhibited here. But of course, once it's baked into the market and you actually take that shot, there's a bit of relief, and the market tends to trade up after that. This is another exhibit showing what happens in the subsequent week. for the first cut. And you could see that it's actually down slightly, but in the month following, the quarter following, and the year following, the market moves up. So again, people are sort of, their mindsets are in the right place, knowing that the rate cuts will help. It's just, this is what history has dictated happens prior to that cut and then after the cut. So what are interest rate traders expecting? We have the September 18th meeting, not too far away. So they have voted 71.5% believe that interest rates will be cut by about 25 basis points, and 28% of interest rate traders believe that it will be cut 50 basis points. If you were to look at this at that Monday, there were people that were calling for a farther significant rate cut. So it looks like the markets have calmed down, but the majority, 71%, looking for at least a 25 basis point cut coming into the September 18th meeting. So we have two really big things happening. We have, the first rate cut, and we have the presidential election. And both of them are sort of combined during this period. And perhaps that's the reason why we saw such volatility over the last 4 weeks. I really think this is quite interesting. This takes a look at the average net fund flows for presidential years going back to 1992 through 2023. And you could see in the presidential election years that equity funds, in terms of the fund flows, were significantly lower versus the amount of money in money market funds. So this is during the presidential election year, which we're in right now. So lots of cash typically on hand. Investors have tended to be cautious during periods leading up to elections. And I know this firsthand. Many institutional investors that I've dealt with in the past during presidential years, and even planning a year ahead of time, they tend to really carry a much higher cash position just because of the uncertainty of what will happen in November. However, when you look at the year after the election, you can see that there's a significant shift in fund flows out of the money markets back into equity funds. And I don't think it's going to be any different this time. We're still in that period of uncertainty. We have a few months left till November, and you have the inflation factor and interest rate factor on top of the presidential elections and that uncertainty. So I think we will continue to see uncertainty in the market. Here is another chart sort of showing the same thing of non-election years and election years. And you can see that the average performance since 1932 in election years is definitely lower than the average performance in non-election years. So again, the election year is having a big impact on investor sentiment and how they vote with their wallets. One more here. And I think this one is, a little bit more on the positive side, because you could see the historical results of the S&P 500 during the years that presidents were elected. And once, the performance really kicks in, you can see it's quite a positive picture. So there have been 23 elections since the S&P 500 index began, and 19 of the 23 years, 83% of the time, it provided positive performance. There's slight differences between Republicans and Democrats coming in, but not that significant in my mind when you're looking at the overall averages. The point is 83% of the time you saw the markets go in a positive direction. So the market continues to be volatile. There's a lot of uncertainty, and you can expect with this volatility, economic uncertainty over the Fed's outlook is resulting, as we have seen, in a market sell-off. And this is typical just before an initial Fed cut, the first cut, as people refer to it. Sometimes it can even extend to the second cut. Inflation, if rate cuts are seen as a response to declining inflation, it might alter investor expectations regarding future price stability. And we have certainly seen this by shifting asset flows into different sectors over the course of the year. And that sort of goes hand in hand with the rotation, the market's reaction to a rate cut, recession prospects of where people invest in what sectors. And the sectors have been absolutely all over the place. So Daniel, this webinar today is supposed to be focused on the Magnificent Seven. So I want to give a picture of where the Magnificent Seven was trading in 2023. It was an incredible picture. In 2022, the Mag 7 actually underperformed the S&P 500. But then when we got into 2023, it was definitely a period of uncertainty. But unlike it is today, The uncertainty was like, how high will interest rates go? How high will inflation go? So there was a real flight to safety. So people sought out the companies, which were the big profitable companies, being the Mag 7. And there were a number of other factors that really drove it as well, with AI, a reversion to the mean. But as a result, the Mag 7 had tremendous performance in 2023.
I would say it's too late now.
Was only up 13%.
You'd be chasing if you buy it
period, and the Dow Jones was up only 3%. So this is sort of just painting a picture to refresh everyone's memory what we saw in 2023. 2024, Daniel, it's a lot different. So we can see the Mag 7 year to date is up. That is the green line, 21%. So you're probably wondering why I have this AlphaPix outperformance Mag 7. So this was a chart that I took from another presentation, Daniel. AlphaPix is a product that we created at Seeking Alpha about 2 years ago. And we designed AlphaPix to provide people with our best quant strong buy recommendations just twice a month. So people wanted a product where they didn't have to do a lot of work themselves. They just wanted our best ideas. So I took this chart from another webinar, and you can see the AlphaPix recommendations year to date are up 31%. The Mag 7 year to date is up 21%. The S&P 500 is up 19%. If you stripped out the Mag 7 from the S&P 500, it's actually up only 12%. So it continues to show that the Mag 7 is still driving the performance of the S&P, hence the tremendous difference between the return on the Mag 7, the overall S&P 500, and what the S&P looks like when you strip out the Mag 7. And then at the bottom line here, I actually have the S&P on an equal weighted basis. And the S&P on an equal weighted basis is up only 9%. So it really shows that the broad market has not participated in this rally. It certainly didn't participate in the rally last year, where the market was up about 24%. The broad market on an equal weighted basis was up almost single digits. And last year, Daniel, the S&P, the median return was actually negative 16%. So it really shows you how disconnected the market is at this period. As I mentioned, we're seeing incredible rotations. On the left-hand side, you can see over the last 4 weeks what the performance has been for different sectors. So utilities, healthcare, and real estate leading the market over the last 4 weeks. That is not untypical of what you would expect during a period of uncertainty and where there's a flight to safety. People really tend to focus on companies that can pay dividends, and you find that in the utility, healthcare, real estate, and consumer staples sector. However, if you looked at the market over the last 52 weeks, it's a different picture. Technology was up 36%, communication services up 34%, and financial services up 29%. So the market is definitely showing signs of stress and uncertainty over recent weeks compared to what we've seen over the last 52 weeks. So going back to that 2023 period, I want to just sort of reiterate what we saw in that market. And really the point of this presentation is to highlight the performance of the Mag 7 versus the market, the valuation framework, and the growth framework of the Mag 7 versus the broader market and stocks with strong fundamentals. So just to reiterate, in 2023, we really saw a reversion to the mean from 2022, where the Mag 7 had underperformed the overall S&P 500. Uncertainty drove investor sentiment, and in 2023, they were seeking out large cap, profitable stocks. We also had the added element of the AI boom, and almost all the Magnificent Seven stocks are really dominating the headlines with what we see in terms of AI news releases and what they're doing in terms of AI and ChatGPT. So there's no question about it. These companies have tremendous cash on hand, and they're making huge investments into AI. And we're seeing really very quickly, it doesn't matter what generation you are. If you're a baby boomer, if you're a Gen Z, if you're a millennial, everyone is using AI right now. So it really plays in the hands of the Mag 7 stocks. And that is one of the core reasons, why we saw the stocks do so well. But it's really important when you're looking at the Mag 7 stocks, whether you own them now or you're looking forward, to assess the fundamentals. What is the valuation framework for these stocks? What is the growth framework for these stocks? We know they're tremendously profitable. But you really have to look at the two key components for stocks when you're investing is looking at value and growth, and both of them have to make sense. So
Thank you
the
very
Magnificent
much.
Seven,
Appreciate
just
that.
in case there are some people on the call today that are not familiar, those stocks are Apple,
I'm here to
Microsoft,
help and support.
Amazon, NVIDIA,
I don't pump
Meta,
or dump any
which
stocks.
is
I only
Facebook,
own the
Tesla,
S&P.
and Alphabet, which is Google. Over the last 52 weeks, the Magnificent Seven stocks have logged an average return of 54% compared to the S&P 500 at 27%. So these 7 stocks out of the 500 continue to drive the performance of the market. And in fact, Apple, Microsoft, Amazon, NVIDIA, and Meta, the 7, account for nearly 1/3 of the S&P 500 market cap, and they account for 44% of the NASDAQ 100. That is tremendous concentration risk for both of those indexes, especially for the NASDAQ. Those 7 stocks accounting for 44%
I'd never buy the NASDAQ.
of the market cap.
It's a bad idea.
Again, it's a very deceptive story when you're seeing how the broader markets are performing and the median return for the market compared to these heavy hitters, these 7, which are really driving the performance for the market. This is sort of just a visual picture of what I mentioned about the Mag 7 accounting for 1/3 of the S&P 500. And I should mention, though, that the S&P 500 had hit record levels of concentration that has not been seen since 1920 with these 7 stocks. And I love this from Deutsche Bank's macro strategist. You always know you have to be fearful whenever you hear statements like this. It really shows that you're at that point where things are going to turn. Usually they make the reference to the size of the economy of California, but in this case, the macro 7, which many of them are based around of California, the Mag 7 are bigger than the entire Chinese market. They are double the size of the Japanese market and over 4 times the size of the UK market. I feel like every time I hear somebody come out with a statement like that, it tells you it's time to go the other way. So this is the performance that we've seen for the Mag 7 year to date. And what I want to highlight here is it really is a different story where last year, all of them crushed the market. This year, we have really one stock that's crushing the market. That's NVIDIA, which is up 162%. Meta, which we had in Alpha Picks, and we just took that out today because it was a hold for a period of 180 days. That's our limit for a hold period in the Alpha Picks portfolio. But year to date, it's up 49%, so it did have a good return. Google is up 19%. That's in the Alpha Picks portfolio as well. But then you have the S&P 500 up 17%. So underperforming the S&P 500 out of the mega stocks is Apple, Amazon, and Microsoft and Tesla. That RSP there is actually the S&P 500 equal weighted. So you can see on an equal weighted basis, the S&P 500 is up 19% versus on a market cap weighted basis, up 17%. And Tesla has been the dog of the Magnificent Seven this year, though it's rallied quite strongly in the last week, up almost 12%. It has definitely been the underperformer of the group. So the Mag 7 has a forward PE of 41 times right now, and the S&P PE is just 21 times. So the overall S&P is a lot cheaper than the Mag 7.
Yeah.
So this is a warning flag that I'm seeing, Daniel. There is still really strong growth, and most analysts have been taking their forward EPS revisions up for the Mag 7 stocks. However, if you are looking at the top line and bottom line growth for the Mag 7 stocks, in almost every case, you could see that the forward revenue growth rate, and I'll just bring us to the very bottom row here. You can see the forward revenue growth rate is lower than it was compared to the year-over-year growth rate. So the forward revenue growth rate is anticipated to be at 21% versus the year-over-year, which was 39%. I would say even a little bit scarier, Daniel, is if you look to the right side.
Please tap the like buttons. We'll share it out on YouTube, and we may will get suggested, and more people will learn today about these stocks.
The stocks on average
wonderful.
is 34%.
Thank you.
For year-over-year, it was 177%. So even though that's growth, that is a huge drop in the growth rate from what it was. So I think this is a real warning flag that people really need to assess each of these stocks as an individual investment and not say, hey, I'm just blindly going to go into the Mag 7 here. because you're not going to see what you saw in 2023. And we already haven't seen that this year. Okay. The performance is not nearly as good for the Mag 7 stocks as it was in 2023. And when you look at these growth rates for both the top line and bottom line, it's a picture worth paying attention to. And this came from Goldman Sachs. They're going out a little bit longer, looking at growth for 2023 through 2025. And you could see how this picture has changed, where the consensus sales growth was, the CAGR growth rate for the Mag 7 versus the rest of the S&P 500. And you can see, there's definitely quite a difference from the levels that it was at. So it had been at 2021 to 2022, it was at 18%, and it's dropped down to 11%. Now the S&P growth rate is lower as well. So the but you also have to say, okay, growth rate is not anticipated to be quite as high as it was. So we are seeing that we have somewhat of a proprietary grade. As I mentioned early on, we have our factor grades where we use A+ through F to distinguish a company's strength versus the sector for value, profitability, growth. And somewhat of a proprietary grade that we have is the EPS revision grade. And that's where we actually look at the quantity of analysts moving their estimate up or down for a company versus the sector. So we're looking at what percentage is moving it up versus the percentage moving it up or down for the sector. And we can see, with the exception of Microsoft, where it doesn't look great, analysts have been revising down for Microsoft recently. Most of the others have been revising up. And the stocks have shown that in terms of the performance, which you can see on the right side. Having said that, as I pointed out, those growth rates for the upcoming year are still lower than they were for year over year. And then when we look at the Magnificent Seven on valuation, and again, this gives you sort of an instant characterization how these stocks look compared to their sector. You can see the valuation grades in the case of every single Mag 7 stock is incredibly expensive versus their sector. And when you look at the growth grade, there's only 3 of them that really have growth that's stronger than the sector. That's Amazon, NVIDIA, and Meta. When you look at Microsoft, Tesla, and Google, and Apple's really lower. That D-, it's like close to an F. That means their growth is really lower versus the sector. The others are at least in line. But when you're looking at a valuation framework and a growth framework, you really have to consider that. People tend, during periods of uncertainty, to really gravitate towards companies that are profitable. And that's one of the reasons why the Mag 7 did so well in 2023 and sort of had that flight to safety really starting in May through July. People were really uncertain about what was going to happen with the overall economy and the market. So they sought out the stocks that are profitable. No question about it. The Mag 7 crushes everybody when it comes to profitability. A pluses across the board, kings of cash. Okay. But that doesn't mean that their growth rates are going to be looking good. And in fact, you can see in many cases it's not. So where do we want to be at this point in time? All right. I mentioned a lot of things. You have inflation, you have interest rates, you have geopolitical events, you have elections coming up. There's still a lot of uncertainty. So we want to mentally be prepared for this uncertainty. But at the same token, we want to stay calm. We want to carry on. We want to look for opportunities. Okay. The name of the game hasn't changed in 1,000 years. It's buy low and sell high. And it's in markets like this.
Oh, don't sell at all, like me.
And they come off that you can look for those opportunities.
Own great businesses.
So if you are an investor, and you are very cautious, what you might want to do is consider loosening up on speculative holdings. So that doesn't mean, anything that's a Mag 7 stock, cut it out of the portfolio. That means, a stock that may have been referred to you by your Uber driver or your barber. But my barber actually happens to be a great investor. He uses Seeking Alpha, and he's a fantastic barber. So, but you may want to be cautious of, it's not my barber. And what your other barber has to recommend, if there's no fundamentals or no data to back it up, take a look at what the data is telling you, and focus on stocks that have strong fundamentals. Also, a good period right now, in this uncertain environment, is to look for stocks that have strong dividend growth rates. That doesn't see companies that have yields that are 10, 11, 15%. Those are actually warning flags. Look for companies that have just strong dividend growth rates that are taking up their dividends. chances are in this market, some of those stocks could be lower than they were a month ago. So the yields might be a little bit higher. So what do you want to expect in periods of uncertainty? I think a couple weeks ago on Friday and Monday, we saw the stocks with the strongest fundamentals get hit the hardest. Okay. Why does that happen? It's because it's where people have made money. So they want to raise some cash. They want to go into money markets. They want to go into CDs. They sell where they've made profits. So they tend to lighten up on stocks that have had good performance. Often those could be stocks that have had very good fundamentals. So if we have periods of uncertainty, there are events, we have over the next couple of months where the VIX spikes and, we have economic data that comes out that's generating uncertainty. Look for those stocks that are getting hit hard, but, try to zero in on the ones that have strong fundamentals. Because when we come out of those periods of uncertainty, it's the stocks with the strongest fundamentals that will rally back the quickest. So get your shopping list ready. So in this environment, okay,
it's very easy to make money.
An article
is to
for
keep
best
it.
defensive stocks.
It's all about knowledge, understanding.
Landing. You can see there's Excel. Year to date, the performance has been good there, but really what I want to highlight, the valuation grade there is a little rich, but when you look at the growth grade, the profitability grade, the momentum grade, the EPS revision grade, very strong. Okay. So that's a stock that you want to pay attention to in the healthcare sector. There's also a utility called the Southern Company. That's done quite well. You normally don't see utility companies up 24% in a year, but they have for a utility company, it's got fairly good, strong growth grades, again, strong profitability, EPS revisions, valuation's a little bit expensive, but that's a good stock. You want to, as I showed you earlier, utility stocks have done very well this year, and they'll probably continue to do well over the next couple of months. Consumer staples can also do well. So I'm highlighting Tyson Foods and Pilgrim's Pride. Both have done well this year, especially Pilgrim's Pride. And there you can see with both those companies, they actually have good valuation frameworks. They're in the A territory. So again, when you're looking at these grades, that gives you an instant characterization how they compare to their sector. So that means both Tyson and Pilgrim's having a much better valuation framework compared to the rest of the consumer staples sector. And then the growth grades are good, profitability. So those are some stocks that you can pay attention to. Dividend, those companies with dividends during this period, you really want to pay attention to the dividend grades on our platform, dividend safety, dividend growth. Those are two critical elements when you want to look at a stock that has dividends, because if your dividend safety grade is low, if you're in F territory or D territory, historically, those companies have cut their dividends in difficult periods. So you really want to pay attention to those dividend grades. So
J&J's my favorite.
I'm going to highlight the next page here, which is stocks that are been beaten down. So the other way that you could focus is if you're not really interested in dividends and you want to take advantage of the markets coming off and stocks that have come off, we wrote an article on 6 beaten down stocks that are rated quant strong buy. And most of these stocks have not done that well this year. You can see Carnival Corporation is down 17%, but green across the board. Valuation looks great, growth looks great, profitability looks great. So it ranks actually number 10 in the consumer discretionary sector out of 506 stocks. And within its industry of hotels, resorts, and cruise lines, it ranks number 2 out of 36. Danny, one thing I want to highlight too is, what does a strong buy mean? It actually means that the security is mispriced. Okay. So when we have a strong buy or buy on a stock, that means that this is far from being priced to perfection. It means it's not priced anywhere close to perfection. And we see an opportunity. If a stock were to be a sell or a strong sell, in our mind, that would be an overvalued stock that has low growth. So conversely, a strong buy would have a good valuation framework and good growth. And that's why we're focusing on these stocks. And the data shows when we're looking at recent quarters coming in, most of these companies have beat analyst expectations, but market sentiment has not been kind to it. Hence, you have that mispricing opportunity. Trip.com, it's up 17% year to date, really strong grades, but recently that's come off as well. Sterling Infrastructure has managed to rally. That's an industrial stock. You wouldn't anticipate an industrial stock to do well this year, but it has. But we like the way it looks. Valuation framework and growth framework both solid at C's, in line with the sector, but profitability momentum and analyst EPS revision is very, very favorable. Now, here's a stock that's down 18% year to date. Twilio. It was sort of a darling last year, and this year the performance is not there. People have been flying out of the stock, but what is there is the company continues quarter in and quarter out to beat analyst expectations. The growth story looks incredibly strong. The valuation looks strong. Profitability looks strong. So that's a stock that I'm recommending that people take a look at as a beaten down stock. Another one that looks good and continues to beat analyst expectations for the most part in the healthcare sector is Amphastar Pharmaceuticals, ticker symbol AMPH. It's down 12% year to date, but it ranks number 18 out of 193 stocks in the pharmaceutical sector. So we like that. And then we have a Latin American airport service company. So this is actually, you know, if you were going to JFK or Newark Airport or LAX, they actually own the airport. And those are great businesses typically. The stock is only up 1% this year. Within its sector, ranks number 2 out of 6. But these are cash cows. You know, when you're in an airport, you're beholden to buying food there. You know, they have lots of stores. The rents that they charge are way higher than you would have on Main Street or the High Street. So we continue to really like that, and great grades for valuation growth and profitability. So what I want to do is I'm going to actually jump out of the presentation, Daniel, and I want to take everybody to our platform. So if you're not familiar with the Seeking Alpha platform, I want to put in a couple of ticker symbols. So I'm going to put in one of the stocks that I recommended, which is Pilgrim PPC. And I want to show you how we get right to the process of that quant grade being a strong buy. You look at the underlying metrics.
I'll give you a link to Seeking Alpha right now if you want.
You know, it's a
With
really
my
great
referral,
report card
you get
for the companies versus the sector.
$25 off
you can
and
see
a free
how
trial.
It compares versus the
You
sector.
can't get that
but then we
without
actually
a
tell you
referral.
where it is in the sector. And in this case, it's 1 out of 185 in the sector. And within packaged foods, it's 1 out of 53.
An alpha
to do
spread
a deeper
as well.
dive,
I know the CEO, and
all
I've
you
got
have
you
to
the best
do is
deal
click
possible.
on growth, and this will show you the growth grades. It's got an A minus, and largely, I should tell you, these are not equal weighted. We do measure each of the metrics. Historically, they've been back tested. Some metrics have a greater weight than others, and that's because they have a greater predictive factor than others. Probably it's obvious one of the predictive factors is EPS growth. And you can see coming in at an A+, the EPS growth has been huge for Pilgrim, hence leading to that overall A-. If we were to look at valuation, you can see almost straight A's here, whether you're looking at PE, trailing, or forward, or PEG, or EV to sales, or EV to EBITDA. Straight A's for this, and we show you
Coca-Cola
what the
and
metric
J&J,
is. So if you're looking at
they are
PE,
the best ones to own,
it's
in
12
my
times
opinion.
versus the sector at 18
I've done a lot of
times.
research
So
on those.
it's at a 33% discount. That A- grade giving you that instant characterization that it's cheap. But again, this is a very transparent system, so you can look exactly at what the metric is versus the sector. Let's take the Magnificent
Steve,
Seven.
real quick,
Yeah.
I do want to point out here as well, when people are looking here on the symbol page on Seeking Alpha Premium, if you look at the factor grades, one of the things that I like to look at is the 3-month and the 6-month historical ratings that are also there within the factor grades. And something that pops out to me is watching the valuation grade go from a C to an A- to an A, or the revisions going from a B to an A, or the profitability going from D+ to C+ to
You're
B,
welcome.
telling me that this company is just on this crazy great trajectory of revenue coming in, and it looks like they're firing on all cylinders, and I can easily visualize that right there on the factor grades.
Yeah, I'm really glad you highlighted that, because the factor grade itself compares it to the sector, but what you're looking at with that time period is looking at the company's own history. So you could see that the valuation now is a lot better than it was 6 months ago. And you could see the analyst EPS revisions is a lot better than it was a month ago. So we're looking at sort of comparing on an absolute basis to its own history, but as well as giving sort of that instant characterization of where it is versus the sector. So I want to take us to a couple of the Mag 7 stocks so people know what we're talking about. So I'm going to put in Apple. And this is really clearly why I want people to say you can't sort of lob the entire Magnificent Seven together, because they each have a different picture now. So we're looking at the rating summary, and that actually shows the consensus for the Seeking Alpha contributors that write articles and Wall Street consensus, and then you have the quant. So you can see with Apple, the valuation grade overall is a D minus, and then you can sort of click on it, and that gives you a picture of what the underlying metrics are that lead to that overall value grade. And you can see the P is it's a C minus, but it's definitely rich versus the sector at a P of 34 times versus the sector at 23 times. It's at a 46% premium to the sector. And then when you're looking at that PEG, which is a combination of PE combined with growth, it really does not look good versus the sector. It's at about a 278% premium, and you do not want to see that in your valuation framework. So not really a very pretty picture for Apple. We'll put in Microsoft, and we'll go to the summary page there. So here you can see the valuation is a D on it as well. And let's get to the revisions this time. So this is the number of analysts that are revising their estimates up or down. And you can see the revision grade is a D plus. In the last 90 days, these are professional analysts. 12 analysts have taken their estimates up for Microsoft, but a whopping 31 analysts have actually revised their earnings estimate down. And I was sort of referring to this before, like the picture that we see for growth going forward is
be careful when they say professional analysts
year over year.
And this is I do analysis for Seeking Alpha. I don't regard myself as professional. I just make money from YouTube.
Quarterly revision.
So it's people's opinions.
Only 5 analysts are anticipating
I am an analyst
that have
for
moved
Seeking
their numbers
Alpha.
up for
Just
the
bear
upcoming
that
quarter,
in mind.
but 17 analysts for the upcoming quarter
It's only a matter
have
of opinion.
revised their estimate down. So that's really a valuable metric to look at. I'll take us back to the symbol page, and then you can see where the valuation. Again, you want to see where it compares versus the sector. And you see a few C minuses there, which means that their grade is a little bit rich versus the sector. Then on EV to sales, it's expensive. So you're looking at an EV to sales multiple of 12.8 times versus the sector at 3 times. That's at a 300% premium to the sector on that multiple. That is not good. Same with price to sales, very, very expensive on a price to sales basis. So again, this is sort of the power of our system. Within one click, okay, you could look at valuation or growth and immediately get a sense of how these stocks compare versus the sector. Let's take a stock that is everyone's darling this year, NVIDIA.
Here we go.
Going to click on that. So NVIDIA is quite a different case because there is definitely, when it comes to growth, profitability, momentum, and revisions, it gets the highest grades, okay? This stock has been in the right place at the right time. They are definitely capitalizing on AI. The reason why we have a quant hold is we do look at the valuation framework. It is important. We're not just chasing stocks. We want to be somewhat cautious. So we don't want to pay a multiple of 300 times for a stock. And if you looked at NVIDIA, again, within one click, you could look at the valuation of the underlying metrics. You can see on a PE basis that it is very expensive versus the sector. Whether you're looking at non-GAAP or GAAP, it's expensive. And then if you look at EV to sales and EV to EBITDA and EV to EBIT, it's expensive across the board. The one place I will say, if you are a holder of this stock, and one ratio that I really do like a lot is the PEG ratio that combines the PE with the growth rate. It's actually very, very attractive on that. So if if you're making your own decision, and everybody should be making their own investment decision, you could look at this and you could say, well, on that factor, it does look good. So if I own the stock, that is certainly enough of a reason for me to continue to hold it. And for many people, as it combines the valuation and the growth, they feel like it tells a better story for the valuation framework. They would say, yeah, I could still buy this stock. So again, that's why these factor grades are so important, is it tells you exactly where the company is versus the sector on each of these metrics. And it's very transparent. You can see the data point and you can see the sector data points as well. So Daniel, I'm going to take us back to our presentation.
And I do want to remind everybody that NVIDIA does report earnings in 8 days. So we're definitely going to see a lot of talking heads talking about the company,
we're covering it. We rank number 1 in the world on YouTube for it.
After that as well.
Absolutely. So, taking us again, if it does well, the market probably will do well. If it does poor, you'll probably want to pay attention to this next recommendation. Within the consumer staples sector, we have Pepsi. Again, this is a period of uncertainty. You have to judge and balance the diversification of your portfolio.
Coca-Cola.
You know, what do you want to have in for the Magnificent Seven? What do you want to have in for dividend-paying stocks, consumer stocks, utility stocks? It is a period of uncertainty. We do like this stock on the consumer staple side, has a yield of 3%. You can see the valuation framework a tad expensive now versus the group at D+. Growth coming in line with the sector, but it is very profitable. Very safe dividend safety grade being a B. Another stock that you can pay attention to, this is a much smaller company, but it has much better grades. And this is actually one of the few stocks that I would highlight that has a yield above 8%. It's New Lake Capital Partners, but this company has a dividend safety grade of A+. That's the highest that you can have for a dividend safety grade. So this company is very strong on most of its metrics. It's on the smaller side. The market cap is about 400 million, but the company is just in the right place at the right time. They're a provider of real estate to state licensed cannabis operators, also agriculture as well within that spot. It's the #1 REIT that we recommend. And the thing that's really interesting about this company is a lot of banks actually cannot provide loans to state licensed cannabis companies or agriculture companies. And that's what this company does. It operates as a REIT, but it provides financing. So they are in the right place at the right time. Those dividend safety grades are really important. If you have a dividend safety grade that's A+ to B-, historically 98% of the stocks that had a dividend safety grade in that region averted a dividend cut. Conversely, Daniel, 70% of all stocks that had a dividend safety grade of F have cut their dividend. And we're using data going back to 2010 through 2024. So if you're a dividend investor, you definitely want to pay attention to these dividend grades. And in fact, dividend growth is a very important grade. I would say dividend growth and then dividend safety, the two together, very powerful. If you were to invest in stocks that had a dividend growth rate of A+ and were also rated a quant strong buy, you could see going back to 2010, it significantly outperformed our benchmark for dividends, which is the Vanguard ETF, ticker symbol VIG. Great performance there. You'll also see our overall performance from strong buys, not just focusing on dividends, but you can see going back to 2010, our performance on the strong buys has significantly outperformed the S&P 500. So I do want to say that the performance on this is included really to give you an indication that this strategy works. It's not realistic to expect that any given day, Daniel, we can have 400 strong buys. No individual investor is going to be able to go out and buy all 400 strong buys, let alone manage the process when it's no longer a strong buy and when something's come onto it. So I want to highlight, this is really more principle than anything else, just to show you that the strategy of focusing on those 5 core factors, growth, profitability, valuation, momentum, and EPS revisions, is a very strong strategy. And if you focus on that with the strong buys, the performance has been there over time. So, go to the next slide actually from here, Alpha Picks, because we've had a number of people ask about Alpha Picks. This is, again, it was designed about 2 years ago. Seek Alpha has an incredible platform where you could look at your portfolios, you could screen stocks, you can identify stocks by sectors, by themes. However, there's a lot of investors who really want us to just sort of do the research for them and vet the ideas. So we created Alpha Picks, which is just 2 of our top ideas a month. It gets emailed out, and it's also on our platform. Since inception, it's up 125% versus the S&P, which is up 46%. And as I pointed out earlier, year to date, it's outperformed the Magnificent Seven as well. So Alpha Picks being the top 2 stocks every month. We have a couple additional criteria on it that we don't have for the regular strong buys. For Alpha Picks, we're looking at companies that have a market cap over 500 million. We're looking for them to have more liquidity. The average daily dollar volume has to be in excess of $10 million a day. For Alpha Picks, we don't invest in REITs. And for Alpha Picks, when we put a stock in the portfolio, if it does go to hold, we'll actually keep it there for 180 days, because my belief is that sometimes you can go to a hold and it's still in a very strong cycle. It could just be the valuation framework has changed slightly, or an EPS revision has changed slightly. So a company will default to hold, but it's still in a strong cycle, so we keep it in. However, after 180 days,
stand by to the end. This is coming to the end now. You can phone in.
Really,
you can be live on the show. I will answer all questions about my personal finances, how much money I've got in the bank, how much money I've got invested. You can call in, whatever you like. Ask me anything. We aim to be the most honest channel on YouTube TV, sharing everything.
So we're going to
everything is on view.
AlphaPix, and this is a separate platform. So if you were to join, there's an about page which tells you about the performance, how we have achieved it, how you can pick the stocks, what the process is, what our sell process is, how we tend to let our winners run. Perfect example is Super Microcomputer. So we'll show you the performance. And you can see over here the return that we've had on some of these stocks. We put Super Microcomputer in November of 2022. The stock is up 968%. And you can see we have Modine Manufacturing up 430%, MI Homes up 300%, PAL Industries up 270%. You could actually see there are about 7 stocks out of about 39 that are.
This is all the money 100%. I have in the world. I own my own house. I have no debts. I have no money in the bank. This is my bank 50%. Account. This is all the money I have.
So you can see the
world.
portfolio has done very well, but great diversification here. We have stocks that are in the consumer discretionary sector, the tech sector, in the consumer staples sector, financial
I just gave
sector.
You a precise number.
So unlike
that's
the
exactly
Max 7,
how much money I've got in the bank. That is my bank
and even
account.
the S&P 500,
Every
which
penny.
is immensely concentrated. In AlphaPix, there's actually far more diversification. So something for you to look at if you don't want to do all the work that is involved with the Seeking Alpha Premium platform. Personally, I like both, because once I have a stock in AlphaPix, I do like to see how it scores up versus the sector. So I can go to my portfolio tools and see how that portfolio compares. Daniel, I'll go back to the slideshow. And I really think that's sort of the end. So I'm going to stop sharing. And Daniel, do you have any questions? Or I'm sure you've seen some questions come in from our contributors. Or
there are a lot of questions. I think one thing I want to do real quick, if you'll stick with me, is I want to show people how to find the sectors on Seeking Alpha Premium, because that's one thing we really didn't dive into. So I want to make sure that my screen share starts here. Give me a second. Let me know. There we go. So when we're on the homepage, just so we're talking about the rotation, we're talking about the data, we're following the data of the Mag 7 and rotating into these other sectors that are going on. Right over here on the left side, the market data section of Seeking Alpha, you'll see this list on the left-hand bar. Now it's broken out. One person asked about gold. They wanted to hear what was going on with gold. You can come here to commodities, and here's gold in the second position. Obviously, you can follow the gold ETF, look at the ratings of that. ETF grades have their own system that Steve and the team have worked on. But right here, if you click on sectors, you can see from the daily or the monthly view. Of course, today we've seen consumer staples, healthcare, real estate, and that kind of aligns with what Steve's talking about.
I think we're going to end it there now.
And then, of course,
I think we're moving on now to other things. So
communication services,
I think
but within
this is a good
the more
time
recent month
to
time
exit
frame,
the call.
We are seeing utilities, healthcare, real estate,
Okay.
consumer staples,
Hopefully
financial services as this market is looking
that.
at that rotation that Steve continues
where
to
the
talk
Zoom
about. So if you're looking for the data, I highly recommend that you come here to the market data section here on Seeking Alpha. Now, Steve, one question that did come through was maybe you could tell us the difference between this Seeking Alpha quant rating system and the Seeking Alpha analyst rating that was also on that symbol page. That was a question I did see.
Yeah, no, Daniel, they're completely separate and independent. So there are on the Seeking Alpha Premium site, it's actually really well known for having crowdsourced research. And I use the crowdsourced research, even though I'm a quant guy.
I tell you what, I will end it here now. This is not what you came for.
I'll see what some of our contributors
so let me do
our contributors actually
end that now.
Stronger than
I'm going to leave the webinar. We can close that down now. We don't need that anymore. Let me just go over to here, and we're going to answer your questions, live Q&A as well. Let me just clear off all of that. Okay, so someone just asked me, what's my position? I have no car loan, no mortgage, no credit card debt, no money in the bank. I don't believe in money in the bank. In fact, I have $10, just literally $10 in Bank of America, zero in Chase, and zero in Lloyd's in England, because I have international account. I have a home in England. I have a home here in the United States. My only income is on YouTube. I didn't earn any money for the first year and a half. I started earning money a year and a half ago. So 3 years now I've been doing YouTube. And I started with $5,000. I've got $109,400. I've never shorted the market. I don't do options. I do have a big margin position. I will share with you. There you go. You can see my margin position. So got about $180,000 invested. I'm not buying anything else now. I don't trade. I just own, and I focus on work and income and paying down my margin because rates are coming down. The stock market's going up. My income is going up, and I bought all the stocks I need now to get to $1 million on the show. That was the purpose of this, to grow the most honest, real-life channel on YouTube TV. It's not here to sell videos, not here to sell drama. I'm the very opposite of those YouTubers. I broadcast on YouTube TV. I'm actually an entertainer. I was voted by Elton John as the world piano man, toured around the world doing music. So now I just did this to help people, right? Hopefully I built the best live streaming studio on YouTube to provide you with the best service. We go live 12 hours a day. I answer everyone's questions. No one gets ignored. That's what this is about. So you can ask me anything you like. I find it easy to tell the truth. You know what I mean? Why would you not? If you try and lie, you just forget. I'm happy and proud of who I am. I have enough. So why not tell everybody the truth? If you don't like me, you don't like me. That's fine. But I don't sugarcoat it. I study. I understand history. I know exactly where that we're not having a World War III, and no, we're not having a recession. We have a Meet the CEO series where I speak to CEOs, hedge fund managers, friends at Wall Street. I associate myself with millionaires and billionaires. I played for Mark Cuban. I played at his house. He's a billionaire, owns the Dallas Mavericks. I did Jerry Jones's gig. He owns the Cowboys. I associate myself with the right people. I believe in associating yourself with the right people. That's the person you become. Not interested in idiots and trolls and those that live in Reddit rooms and stuff like that. It's why I go live every day and challenge and answer every question. So I hope that answers your question. You said that gives me hope. If you feel this account will get you to $1 million, 100%. 100%. 100%. And let me explain why. So I've got currently 83,000 in my brokerage. I've got 26,000 in my Roth. I've got a grand total. That's wrong. Let that refresh. Sometimes Robinhood has a little glitch. There you go, 109. So, but then you add the margins, about 180,000 invested. So coming up to nearly $250,000, right? Well, by the end of the decade, we're going to 3x. I said that before Tom Lee, by the way, said that. I believe that because of what we've got now with the AI explosion. It's why today's show was all about NVIDIA. It's why we're covering NVIDIA, why I make lots of videos on NVIDIA and so on and so forth. But be under no illusion, I only own the S&P, okay? And how I'm going to get to $1 million live on the show, it's quite simple, really. I have 180,000. So just by, and that's within 6 years. So I've said I've got to be $1 million 6 years. Just by the my position 3xing, we're going to be 600,000 just by it 3xing. But bearing in mind, interest rates are going to come down, and I earn about $2,000 a month on YouTube. That's my income. You can go and see that on Social Blade. You know what I earn. I'm going to be putting that in, not selling my stock, but paying my margin down. So add that to the top of that as well. So it doesn't take a rocket scientist to work it out that I'm going to get to $1 million. And that's all my aim is. I have two aims: to get to $1 million live on the show without ever doing an option, without ever trading. Now I've done my trading days. I've bought every stock I ever need to own. I've already done it. I'm now just paying down margin, because in a year from now, 2 years from now, I don't want to be paying 20, 30% more than I can now. It's ridiculous, right? Because it's about income. When I spoke to Cuban and other millionaires and billionaires, and tomorrow, by the way, we have a CEO live on the show from the New York Stock Exchange, live tomorrow on the show. I'll tell you about it in a second if you're interested. If you actually want to associate yourself with the right people. Well, hang on.
Antonia de la Cruz donated $1.99 through a super chat. Martyn, can you please explain how margin works?
Yes, I can. I will explain it briefly, and then I will give you a full video to watch the details. Antonia de la Cruz, you're one of my members. Absolutely, I'll answer everyone's question, so I'll do that in a second. But I only own the S&P. It's very important for me to share that with you. I don't pump and dump stock, right? I'm not a YouTuber. I'm not Matt Cause. I'm not Meet Kevin. I'm not BitBoy. I'm here to help people, right? If I go back to my main portfolio, you will see 100% of my portfolio in the Roth and the brokerage is the S&P. For two reasons. One, it's the right asset to own right now to get me to $1 million without any stress or drama. I don't have to sell. I just own the businesses. I let the businesses go to work for me 24 hours a day. 24 hours a day, Apple is selling things, Coca-Cola is selling drinks, NVIDIA is fixing problems. All of that, I'm the owner of those companies. That's how I see it. I don't own shares. I own businesses, right? And the other reason is because I meet... Oh, hello.
Chippyism has become a member.
Just upgraded to silver. Just bear with me a second then. I'll give you your upgrade in a second. Because of that, I want to be not just do the right thing, seen to do the right thing. So it's very, very important for me because if I'm interviewing CEOs and interviewing managers, fund managers, and I'm on my X account, by the way, and my Instagram, I'm talking to CEOs and CFOs and everyone associated with the business all the time. I have plans to have Elon Musk on the show, Sir Richard Branson on the show. The list goes on. So because of that, I want to always be seen to be completely neutral. Better than Bloomberg, better than CNBC. They're all contributors and they've all got their own ends and people don't believe a word they say. You know what happened a few weeks ago when Bloomberg interviewed me? I pulled the interview because they were trying to control the narrative and Virgin Galactic were trying to mess it all up. I had nothing to do with it. I said, take off my interview, can't use it. Because I'm not here to benefit myself. I benefit myself by doing the right thing. And it's easy to do the right thing if you're just confident in who you are, answer everyone's questions and just do the right thing rather than selling bullshit, right? It's just not what I do. So that's how I'm going to get to $1 million. So yeah, anyone can do what I'm doing. What I'm doing is easy. It's easy. It's easy. I've always made money. I left home at 16. I've always had money. I've always done what I wanted to do. Making money is easy. Keeping it is the hard part. And it's about knowledge and power and associating with the right people. Don't associate with idiots. Don't waste your time in Reddit rooms. Don't waste your time looking on YouTube channels. And I mean that with the greatest respect.
Chippyism has become a member on Extra.
Oh, a member on Extra as well? Bloody hell, Chippy, you're a member on both channels. We've got a network of 3, by the way. Right, so I hope that answers your question. So that gives me hope. If you feel this account will get you to $1 million, I am in a similar financial position. Maybe I'll get there too. You definitely will. If your main focus is income, earning money to invest it. See, what a lot of people do, they look at the stock market like a casino, and they think, I want to get rich in 5 minutes. It's why I'm out of crypto. Crypto's boring for me. We have a crypto challenge with Sensei, who does our Sensei show. He does all the crypto and everything else. And that's great. But I got bored with it. And I'll tell you why. I sold all my Bitcoin. I sold all my XRP because I want to own businesses that earn money. As I'm sleeping, my businesses are working for me. I own them. And my job is to educate myself and earn money to buy and own those businesses, not sell those businesses, not trade those businesses. Remember, every time you trade, the only person that always wins is your brokerage, including Robinhood. It might be free, but because of buy to order flow, they sell in mass in wholesale, they still make money when you trade. Microscopic, but it adds up to millions if you add everyone together. So because you can trade doesn't mean you should trade. I want to own NVIDIA. I don't buy anything I can't own for 10 years. As simple as that. So I hope that answers your question. This man works damn hard to share all the information and help his viewers. That's what this is about. Yes, indeed. You don't become a millionaire by making money. You become a millionaire if you invest money you earn. You don't become a millionaire by making money. You become a millionaire if you invest money you earn. I don't know about that. If you're focused on the money I invest has to make me rich, then you're going into it the wrong idea. You're trying to maneuver. You're not comfortable with what you own. Focus on you. You can control you. You can't control what the stock market does. You've got no way to predict that next week NVIDIA sells off. Doesn't matter how good it is. And remember, the business is still the business. I know because I read the balance sheet. I know because I talk to those at NVIDIA. I know because I'm talking to CEOs all the time. I like the business and I share that information with you. So I don't have to worry about the stocks. I just own the businesses. What I have to worry about is what I can control, and that's me. And my job is to go on YouTube every day and earn as much money as I can, do as many shows as I can, but not sell videos. And this is why it's important. This is the secret. I've always found this a secret to success, really. It's about value. It's about providing value to your customer. How can I add more value? How can I increase my services? I know I'll go live 12 hours a day. About a month ago, we started doing 4 earnings a day. 2 in the morning, 2 at night. 4 earnings a day I now do. That's my focus. Not increasing the cost of my membership. I have promised my membership will never go up in price. It will never go up with inflation. So it's actually going to get cheaper every year. But my services will be increased. Not like Netflix, keep adding more and more bloody, it keeps getting more expensive. My membership was $2.99 3 years ago on this channel. It's still the same today. It's never going to go up. But I'm adding more and more services. So I think as an individual, to being successful, you've got to find a way to provide a service for the world. Whether it's your customers, your business, your family, doesn't matter. Be useful. Provide usefulness. Make yourself unique. Mark Cuban said to me, billionaire, Shark Tank, who he is. He said, Martyn, be the best of yourself and you always make money because no one else can be you. Don't try and be somebody else. Don't try and just be a YouTuber doing silly faces and silly news and pretending you know about history when you don't and making up silly stories. Graham Stepan, wave your hands all over the place. Graham Stepan, he's got like 4 million subscribers. He said he does that because he gets the algorithm likes it. It's rubbish. I ain't doing it. I'm doing it a bit now. That stop it, Martyn. Keep your hands still. I don't care if it appeases the algorithm. Serve the public, and you will eventually be successful. Don't worry about everybody else. Don't let everybody care what everybody else is doing. So that's what I think. Earn money and think like a rich person. If you think like a rich person, you invest everything and spend what's left. A poor person spends everything and invests what's left. I have no time or no interest to run around buying Nike t-shirts. I just need a good shirt. I've got about 10 black shirts like this. Good quality, but no name on it, right? I don't want to walk around the mall. You never see me at the mall buying stuff. I'm too busy online. You never see me at networking meetings trying to get business. I just get up in the morning and do my show. So focus on your business, what you do, and invest everything. Stop wasting money. Let everybody else shop in your... Everybody else go into Coca-Cola, buy Coca-Cola. My stocks go up. Everybody buy a new iPhone. My stocks go up. Be that person. Don't worry, there's always going to be plenty of people just running around spending because people who are not confident with themselves spend because it makes them feel better. Makes them feel better. There's always people, don't worry about what if we all become investors, no one's going to buy anything. They won't. There'll always be people buying stuff. Always. My channel grows hundreds of subscribers a day. Last week we had 1,000 subscribers a day for like 2 days. 2 days we had that. There's always people that want something. Always. Provide it. Provide the best service and you'll always succeed. Somebody asked me to explain margin, so I'm going to explain margin. Thank you, Paddy.
Paddy on tour has become a member.
If you please bear with me, I will give you all your perks and benefits in a minute. I'm going to answer margin, and then I'll tell you, in a few minutes, I will give everybody their benefits. Just let me tell you, people become members because they want to support the show. That's why they become a member, to support, because I make no money from the live shows. If you want to make money on YouTube, you maybe half an hour live a day, but you make videos. I prefer to go live all the day and answer all my questions, all right? That's why I'm here. So people become members to support the live shows. And then in return, because you're giving to me a couple of bucks a month, doesn't make me rich. That's not how, it doesn't make me rich. I earn $2,000 a month on YouTube. I could go out tomorrow and do a gig in Dallas for Mark Cuban and earn 5 or 10 grand on a gig. It's not, YouTube is not to get me rich, right? I give back. So if you become a member, I put you on the homepage of my YouTube channel. I'll get everyone to subscribe to you. I promote your business. There's loads of stuff like that I do, and I'll explain the membership deals in a minute. I give away cash prizes. We've got one guy who was a bronze member. We got him in the top 10 selling authors on Amazon within 4 days. I got everyone to go onto Amazon. I've got a sponsor right now, one of my members who pays $99. We're going to give him the #1 wedding website in the world. I might mention that in a minute. So if anybody wants to grow on YouTube or promote a business or whatever, then become a member and I'll tell you all about it. So but let me just answer this question about margin. So, and again, I'm not just telling you about it. I'm doing it and living it in real life. This is all the money I have in the world. That's my real bank balance. That's my real margin. There it is on the screen. You see it's all real. Let me explain why margin. Why margin? Now, and I've experienced margin call. Technically, I was margin called. I wasn't actually, because I'm live every day. I could see it coming and I just changed my position. So I never technically got margin call, but I know what it was like because it brought me to tears when I first started trading. And I know because I've been bankrupt once, never twice, only once. You learn from it. I've lost my home once. I've lost my family once, my children. I've lost everything once. You learn from it. You learn nothing from success, everything from failure, okay? And I know I've had lots of failure. Failure is how you grow and learn. If you get lucky on a stock or buy Binky Bonk coin, you learn nothing from that. You think you're the greatest trader in the world and you're an idiot, okay? Nothing from success, everything from failure. So I have experience of talking about margin. So I would never, ever use margin to buy an individual stock. That is crazy because you don't know what an individual stock's going to do. It's impossible to know. Nobody knows. And if you go all in on margin, so you double up and 4 times, whatever you do, and the stock goes down, you're forced to sell. Do you have money to pay it off straight away? I guess not. Otherwise, you'd have brought the cash in. So first of all, I am 100% committed to getting to $1 million. I know how to do it. I know what I need to do, and I'm following a plan. Not deviating from that plan. I'm buying the S&P. I buy it on macro conditions when it drops 5-10%, which is what I've been doing every time it does that. So I've not got just the 10%. I've got the 20-30% gains because I'm buying the macro dips. So that I can believe in, and that I can pretty much guarantee is going to be up in the future. Good investment. I can own that and never sell it. So I'm all in. I've used all my cash. People say, well, why have cash on the side? Stupid idea. No millionaire I've ever spoken to has got cash in their pocket. No billionaire I've ever spoken to has got cash in their pocket. None. What's the point? No point having cash in the bank. Zero. All that happens is the bank lends it out 10 times. It's rubbish. Inflation goes up, your money's worth less. What's the point leaving your money in the bank? Zero. Well, you need money to 6 months. Dave Ramsey will say, you need money for 6 months. You don't have to have cash sitting around to do that. I've got a $109,000 sitting here. I can borrow against this money at 6% any day I want. I can find money any day I want. I can even sell a couple of shares I bought a year ago, which are up 30, 40%. I've got loads of money, right? So I've got money to pay the bills. And then I use a credit card. I earn 3% cash back. I never pay interest. And then I've got cash to pay off the credit card. So you don't need money in the bank. Anyone who tells you that is talking absolute rubbish. No millionaire, billionaire has money in the bank. That's a stupid idea, right? So number one. So all my money is invested on the S&P. Every penny. 0 in Lloyd's in England, $10 in America in Bank of America, and 0 in Chase because I've got the Amazon credit card. That's the only reason I've got a Chase account. Nothing. All in here. I can access it 24 hours a day, 7 days a week with my Robinhood debit card. Soon will be a Robinhood Gold card, right? So I don't need cash in the bank. That's a stupid idea. Okay? If anything goes wrong, just sell a couple of shares or borrow against it, even better. Anyway, so that's the first thing. I'm all in. Every time I earn money, I buy the S&P. Simple. My own money, I just buy the S&P all the time. Never stop. So when do I use margin? Margin is when the stock market is oversold. It goes down. Like we had the carry trade. We had the overreaction. We had Donald Trump say that the world, America would cease to exist in 48 hours. You remember that? An email went around. And he was telling everybody that when Iran invaded Israel, the market went down like 5%. What a rubbish. Meet Kevin said World War III is going to start every day of the week for the last 2 months. We're going to be 60% down. All of that was rubbish. It's good for them. It drives up their engagement. They get more views. They get more attention. And the stupid people go, "Oh, the world's going to come to an end." I went, "Is it?" Well, I've studied history. I went all the way in history, and I know Meet Kevin knows nothing about wars and history in Europe. Zero. He talks nonsense. There's not going to be a World War III. Even if there is, who the hell cares? You're all dead anyway. So when it went down, I used margin. Now, you might say, why? Well, if you'd held cash, you could have used cash. I'm already in. I've got every penny invested. I don't have cash sitting around doing nothing. That's bloody ridiculous. That's like waiting for Bitcoin to take off next year. Let's sit around and wait for a year for Bitcoin to go up because everyone decides to buy it. No, I want to be in the business, own the business because it's making money 24 hours a day. I'm not sitting around waiting for some magical moment where everybody let's all buy something on Bitcoin. That's bloody ridiculous. I want my business working for me now. Every single day, 24 hours a day when I'm sleeping. So I'm all in. So now the market's gone down, and because I've got a balance of $109,000, I could borrow another $100,000, $200,000. That's what margin is. Now you might say, well, why would you want to borrow money? Don't borrow money. That's a stupid idea. Why do you think the greatest businesses in the world borrow money? Apple, Amazon, Microsoft, Google, NVIDIA, they've all got debt. And you go, well, why have they got debt? They could pay it off in 5 minutes. They can. Every one of those businesses can pay off their debt in 5 minutes. The same reason as the bank hasn't got any money either. It lends all your money out. Money is debt. That's what debt is. I don't mean debt to buy a pair of bloody Nike trainers you can't afford. That's not what I mean. I've got no credit card debt. I've got no mortgage. I've got no car loan. I started investing after I bought all that, all right? I'm not on about that sort of debt. I'm on about debt that owns a business. So when we get a massive drop, like we had a few weeks ago and before, turn on the margin, buy some more. Because I know that was a macro condition. That wasn't real. Donald Trump saying America would cease to exist in 48 hours was ridiculous. No matter what party you vote for, that's a ridiculous thing. Members, by the way, I am coming back to in a moment. I'm just answering the question about margin. So I bought in because I'm confident. Now then, with margin, you only use margin to buy what you know and you can own, not to trade. If you're buying a stock to trade, you're buying Binky Bonk, or you're buying some very speculative stock, you're taking huge amounts of risk. I don't take risk. I don't risk a penny of my money. I don't lose money. I don't sell when I'm down. I don't sell at all. I'm always making money. I don't lose money. Rule number 1, don't lose money. Number 2, remember rule number 1, never lose money. So I don't buy anything to lose money, and I'm not going to lose money. So when the stocks went down, I turned on margin. I borrowed money. Now what that means is I use Robinhood's money to buy my shares. So my balance hasn't gone up by 10 grand, 20 grand, 30 grand. It doesn't go up. The balance is the same. Because you still owe that money. So they didn't give you cash to go out and buy a new kitchen or a new holiday, and now it's gone. You own the stock. So all that happens is you use their money to buy the stock. So my balance here shows the profit or the loss on those stocks, including what I own and have. That's it. If I paid off all my margin right now, I would still have 109,324. Meet Kevin a few months ago said you can go bankrupt with margin. Talks absolute rubbish. You cannot go bankrupt using margin if you understand how it works. If you blindly have no idea and you sit on the beach and don't pay attention, you could, I suppose. But if you know what you're doing, that's impossible, right? Absolutely impossible. Anyway, so 109,000. So what happens now is, because I'm doubled up, if the market goes up 10%, I'm up 20%. If it goes down 10%, I'm down 20%. So I have to be careful of margin call. Now, margin call is when you hit the maintenance line. In other words, you've borrowed money from the bank and they've said your stocks have dropped by a certain amount. We're worried that we're not going to get our money back. They're not worried. They have your stocks. But they're not going to let your stocks go to zero so they can't get any money. Hence, you can't go bankrupt. Hence, Meet Kevin talks rubbish, right? That can't happen. What happens is, as your stocks go down, if you're not paying attention and you're sat on the beach and you're getting drunk every day, they will sell your stocks on your behalf when they're down to pay off your margin. Well, you don't want that, do you? Bloody stupid, isn't it? So that's how a margin call works. Now, remember, if you hit the maintenance line, which is the level where they start going, right, you've got to add some money or sell some stock to reduce your margin. You might go under by $1. You've only got to add $1. You've only got to sell one share. You haven't got to sell all of it. It's not all or nothing, drama or crisis. It's just, okay, I'm $1 under, add $1, I'm up again. So that's how the basic principle is. But if you look here, this is my position. You see it says there, 50% buffer. The stock market has got to drop 50%. I only own the S&P. It's never done that in history. We're not going down 50%. No, it's not going to happen, right? So that's fine. I could buy more and my buffer would get smaller and smaller and smaller. I don't want to do that because I only want to get to $1 million and I'm going to do that with what I've got. I can sleep at night. I can relax. I'm not bothered. It's great. Now then, this is the reason why I'm using it. And not necessarily you should, but why I'm doing it. Because I'm watching the markets 12 hours a day, live every day, and I'm buying the macro dips, the nonsense, the exaggerated nonsense, the carry trade, Donald Trump saying this, election fever, all of this. I'm buying the dips because margin is costing, look, let me show you, and Robinhood is the cheapest way of buying margin, by the way. If you look here, view all rates. Let me share with you. The lowest rate you can get on Robinhood, can you see there, look, just across there, is 6.75. The highest rate is 6.75. I'm on 6.55. Can you see that there, look? 6.55. That's my margin, that's my rate, whatever. 6.55. Okay? The first 1,000 is for free. Used to be 2,000, it's now 1,000. Okay? I'm making 13% a year. It's just the same way as Apple and Google and Microsoft borrow money.
Antonia de la Cruz donated $1.99 through a super chat. So how do you pay your margin?
I will explain that now. That's what I'm coming on to now. Thank you for asking, and thank you for the super chat. See what I mean about providing a service? I'm providing a service. I've just earned $1.99 after tax and commission from YouTube. I've got about $1.50. That will go towards my margin. That's my income. That's my job. I'm providing a service. That's what everyone should be doing, right? So I'm earning 13% a year. In fact, I'm earning about 20% a year because I buy the dips. I buy the overselling. So we're not just getting the steady growth. If you buy a dip, you get that plus steady growth. So I can make 20% a year on the S&P. It's costing me 6.5%. So 13.5% a year net profit. Plus, interest rates are about to go down. Margin is about to go 6.25%, 6%, 5.5%. 3 years ago, I think it was, margin on Robinhood was 2%. Imagine that. That's 11%. No, that's 18% net profit if I'm 20% a year. There you go. So to answer your question, how do I pay it off? The reason, another reason why I own the S&P is it pays me enough in dividends right now to just about cover my interest payments on margin. Just about, not quite, just about. So tomorrow, 21st of the month, I get paid on YouTube. I've got $1,000 this month. That's what I've got this month. I've had an expensive month. I've had bills to pay. I haven't got my usual $2,000. I've got $1,000. I've got $1,000 to put in. I will reduce my margin by $1,000. My balance will go up tomorrow by $1,000. My margin will come down by $1,000. So my balance will go up to $84.75 tomorrow. You'll see it on my show. Next month, hopefully, I don't have the big bills of this month. I paid some bills this month. I'll have a couple of grand next month. Hopefully, I'll earn more. I'm always earning more because I'm building my business. I will be paying it off quicker and quicker. I'm not buying any more. I don't need to buy any more. I've got all the stocks. I've basically bought the future. I've bought the S&P 3, 4, 5 years from now. Well, there's nobody on planet Earth who's going to tell you that the S&P is going to be less in 5 years than it is today, because that's never happened in the history of ever. And particularly with NVIDIA and what's going on, that's not going to happen. So I'm buying it at today's prices. Now, the reason why I'm doing that is, as an investor, not a trader, and having associated with millionaires and billionaires, what everyone does who's rich is they don't gamble. They have investments that are hundreds and thousands of % up. I want to live like that. And to live like that, you have to do it now. Like the Chinese say, the best time to plant a tree was 10 years ago. If not, today. Not tomorrow, next week, next month, next year, now. That's why I don't sit around waiting for Binky Bonk and Bitcoin next year. I'm in now. The clock is already ticking. I started in January of owning the S&P, so I'm 8 months in now. So by buying now, I've got next year's, because the amount I've got and the time it'll take me all those years to pay that off. So I've basically bought the future because I believe in me. I can control me. I can earn money and I can pay that down. So that's how I pay my margin. Antonio de la Cruz. The S&P pays me a dividend, about $600 a quarter, about $220 a month. It comes in. I do not invest it in the S&P automatically. That's a terrible idea. It's a lazy idea. It's for people who are lazy asses. It goes into my cash. I use it to pay off margin, or if I wasn't in margin and I was just building up cash, there'd be no reason, I'd be holding cash until I see dips. Simple as that. So I don't automatically invest it. I hold it and I buy the dip. So for me, because of margin, I'm paying off my margin. So a year from now, my margin will be a fraction of what it is today. Interest rates will be a fraction. My portfolio will grow very quickly to 200 grand. Then I'm going to continue paying off my margin and simply sit around and watch it grow. And then I'll make it all the way to $1 million. Now then, I've got some members to give their benefits to, but I also want to add to that information. That was a bit of information. but there's a lot more to do with margin than that. So this is how you get all of my margin information.
Zach Zeit donated $10 through a super chat. We invest in you now for a better and honest future.
Absolutely. My investors, my members invest in me. I invest in you because you give me $10, but I give you my lifetime. I've always said, I recorded a song on my music channel. You gave me the time of my life. No, you gave me, what did I say? What were the words? You gave me a lifetime and I gave you a lifetime, which is what I'm doing here, and you give me the time of my life. That's exactly right. You give me the time of my life, and I give you my lifetime. That's right. So let me show you what I mean here. This is for my viewers who want more information on margins. If I go, this is YouTube search, right? This is YouTube search. If I go Martyn Lucas Investor, you can do this. Margin. I've made lots of videos. I've made 2 main videos on it. Right. There's one, margin call. This explains it in much more detail. So let me give you the link. There's margin call. Right. Here comes the link. There's margin call. And another one. Well, there you go. Margin call. There's another one. So you might want to watch these instructional videos if you want more information on margin and really understand how it works. Now, if you are considering using margin or whatever, I strongly suggest, first of all, you watch those videos. Not because I make money out of you. I make about 1 cent per person who watches a video. That's it. So if you watch my video, I earn a cent. Thank you very much. Pay tax on that and blah, blah, blah. It's not about that. It's about you understanding how it works. This is not financial advice. My understanding of margin and how I understand how the market works is not yours. What I do is what I do. I have income coming in. Don't use the stock market like a cash machine. You want to get rich from the stock market. I make money from earning money and I invest it. Don't use the stock market as some free place to just, magically make money fall out of the sky. That's not how it works. All right? That's not how it works. Now then, some of you became members here today, so I wanted to give you your benefits and explain what you get as a member. First of all, there's a lot of stuff I can't say. It'll take me 20 minutes. So I've recorded you a video. I've taken all the ads off. You don't get any ads. It doesn't make me any money. It's just so you learn about your benefits. People become members to support the channel. You may notice 98% of our live viewers on a normal show, not a special show like today, a normal show on every day, 98% are members. It's the highest engagement rate of any channel on earth. Check the analytics on Social Blade. You will see that we have the highest engagement rate of any channel in the world. More than Mr. Beast, more than anyone. All right? People become members because they like the family and want to support it. We have members in 63 countries, 14 languages, and hopefully we'll be the best channel in the world. That's what we do it for. So in return for you giving me $2 a month, as a bronze member, I try to provide you services. That makes me feel good, right? My wife tells me every day I did a good job. My wife's in the background now, around the house, making dinner, getting ready for this evening. She tells me every day I've done a good job. That's what I want to do. So I find ways every day to add more services, not increase the cost, never increase the cost, no inflation here. So as a member, first of all, you get members-only live streams, members-only chats. There are videos that only members see. If you look on the homepage, if you watch that video, it explains everything. This is just a brief thing. On the homepage, there are members-only videos. There are members-only live streams. Things that the non-members never see. I save the best content for the members. Seriously, I'm not just trying to say that. The best stuff is for the members. I will answer every question. Every single question that you ask me on YouTube. This is my full-time job, 12 hours a day. I'll answer your questions, either by text or I make a video on it. So when you comment below a video on YouTube, I search by members. I don't look for non-members. I haven't got time. I search for members and I reply to you. Answer a question or make a video, a little short to give you that. If you then reply to me as a separate comment, because it doesn't search for replies to replies, okay? Very important. If you follow me on social media, I will engage with you. If you want me to promote your business, help you rank for something, I can help your YouTube channel rank, I can help your Instagram, your business, anything. I can make it rank. I love doing that. Mr. Beast does that with other people's money. I do it with my own time. All right? I want to see everyone grow together, right? You get that. If you are a member and you do a super chat from $1, you can book an analysis review. I will review a stock up to an hour long, make a video on it. I'll do that for you. The higher you bid, the higher up the list it goes. We've got about 9 at the moment. The highest one's $10, and I'm going to start doing reviews again. I've not done it for a couple of weeks because we're doing earnings season. Talking about earnings, if you are a member and you do a super chat, you can book an earnings. 2 in the morning, 2 in the evening. We have 2 channels, this one and the extra channel. One of the other perks you get as a member, we have this channel running 12 hours a day. It's not about trending videos, selling videos. It's just a live stream behind the scenes. Look, this is behind the scenes. This is me now from the back. And it's a place for members to talk to each other, get information live, alert me to breaking news. Martyn, Tilray's got a big news story. Can you go live? Stuff like that. Honest, real information. So we put up a paywall. Chipism has just paid 99 cents. Any investor can afford 99 cents. I've made it as cheap as possible. But by adding a paywall, it stops all the bots, the scammers, the trolls, the Redditors, those that want to promote Binky Bonk, because they can't afford 99 cents, or they just don't care. They just go away. They just blow them over. The idiot army, you can just go, and they all fall over like that, like paper soldiers. The real army, the LucasAid army, are here every day, 12 hours a day, answering your questions. So if you want to be a member on Extra, here's the Extra channel. We're live there right now, and you want to talk to investors and members 12 hours a day, there is the link. And it's 99 cents. You can watch for free, listen for free, but if you want to chat with the members, it's 99 cents because we stop all the idiots, okay? Also, if you're a member, you can have a free song on the Friday night concert. We do a concert every Friday. We can celebrate your birthday. Every morning before I start the show, an extra 15 minutes is for me to set up behind me. Look. The studio, the piano studio. See all the cameras moving? If it was someone's birthday right now, I go to the piano live right now and do it. Every morning I get that prepared just in case a member has a birthday. All right? So you get that. The list goes on. And when people suggest new ideas, I add that to the list. It just keeps on going on and on because I love it. That's it. And like today, we had this special because I got a pro account at, Seeking Alpha. So I brought you this content today, which hopefully you enjoyed. It seemed we had quite a busy show. So there you go. So then, thank you to all the new members. Let me give you the links for the things that you might want. Here's my X. This is where I speak to... Oh, hold on a second. I've got a CEO in the morning as well. I'll tell you all about it. Here is my X account. If you want to follow me on X, I will... people engage with me on there. That's where I talk to CEOs. I talk to investors, Wall Street managers, the people that, I want to aspire to, I talk to. I'm also on Instagram. If you want to talk to me on Instagram as well, there you go. Engage with me there. All right. There you go. Got that? Okay. What else can I give you? I've given the Extra channel. I gave everybody the music channel because I'm trying to raise millions of dollars now for charity. Subscribe to me. Help me grow on there so I can raise money for charity. Your charity. One of the members' perks. Tell me what you want me to do and I'll raise money for your charity. So that's that. I think that's enough links for now, isn't it? Oh yeah. 2 more things. Discord. We provide free training. Scalp trading. We don't charge for it, right? We don't ever increase coupon codes which expire tomorrow. It's always free. It's always free. We've got a trained expert who's paid to learn. There is Discord. Now, if you set up Discord right now, you will not see anything. There's nothing to see. You have two ways to see it. You can either become a Discord subscriber, so you pay a couple of bucks if you want to do that, or if you're a member, I give it to you for free. So how it works is, go and subscribe to Discord. It's free. Don't pay for it unless you want to, right? I'll give it you for free. Once you've done it, it takes 10 minutes to get through security. Come back to me on a live show. Put your username in the chat. If it's too busy, I'll just filter by members. I will find your username, upgrade you manually, welcome you in, and tell you how it works and how you can get the free scalp trading. You can provide links for the show. So if you want me to cover a news story, make a video on your favorite stock. Remember, I rank #1 now for about 20 stocks. So if you want a bullish or bearish, I'll tell you how it is. I'm not going to just do what, it is how it is. I'll make a video on your favorite stock. You can send the links in and I'll do that. You get that on Discord. Now, when you get on Discord, within 3 seconds, some idiot pretending to be Martyn Lucas will send you a message. I never send you a message. They can all use my display name. They can all use my logo. But I'm only one on Discord has the correct spelling of Martyn Lucas. And you're not even got to worry about that. Just remember, I'm not messaging you. When you get in there, give me your username. I'll upgrade you. You send me a friend request live on the show. I'll accept it live on the show. All right. Now then, I think that's it. How to become a member. Ike Daniel. It's on the homepage of the channel on the membership tab. But here's the membership link. If you are on an iOS device, you need to be on a browser and you need to select desktop version. That's because Apple tried to take commission out of YouTube and they don't like it. There is the link there, Ike Daniel. I've given you in the chat. Okay, there's a membership link. Now, I believe somebody became a member, a silver member. Let me just scroll up. Paddy on Tour's a member. Right, Chipism has upgraded to a silver member. So, Chipism, are you still here? Because you get extra benefits, of course. We've got gold members. We've got sponsor members. Chipism, are you here? Are you here? Can you come back to me? One of the perks that you get is to go on the homepage of the channel so we can promote you if you have a YouTube channel. So you have to ask for it. I don't do it just for everybody. But if you say, yes, I would like that, I can give that to you. So Chipism, are you a YouTuber? Don't just say yes if you don't make content. It's kind of pointless. But if you are a YouTuber, you do have one video. All right. So Chipism, would you like to go on the homepage of the YouTube channel? I know you're here because we've got a nice audience. I'm going to do something for you. You're going to love. You're going to love it. You're going to go, this is the best thing ever happened to my channel. No earnings to. Let me just wait for Chipism to come in. While we're waiting for that, let me tell you what we've got. Zubair has asked what earnings we've got tomorrow. If you look on the homepage of the channel, you always see upcoming live streams. What's coming next? Now here we go. Tomorrow morning, after the opening bell, meet the CEO. Remember, I have friends on Wall Street. I have CEOs all over the place. Tomorrow, Jefferson Boots, who has got a private company, is about to take it live on the New York Stock Exchange. He's about to go live with a gold mine with an exclusive patented technology which will make their gold mine very unique. These are one of my friends. These are the people that I personally associate with. I'm not promoting the stock, not advising you buy it. I'm simply telling you, tomorrow he's on the show telling you all about it because many of our investors have already bought convertible notes waiting for it to IPO. When it does, they get an immediate 10% boost and a 30% discount and all the rest of it. If you want to know all about Jefferson Boots business, another CEO, gold mine, tomorrow morning, 10 o'clock. The earnings is tomorrow night, Snowflake. Friday, Jackson Hole. Big day. It's kind of non-event, really. It's a big day, but non-event at the same time. NVIDIA earnings, of course, it's going to be our biggest event ever. We had 23,000 live for the Virgin Galactic flight. I reckon we could do more on this earnings, but we'll see how it goes. Right. What do you think of investing in the NASDAQ? No. Too tech heavy. I only own the S&P. I wouldn't buy the NASDAQ. That's silly because great businesses like J&J, Coca-Cola are far. They're not even in it, I don't think. It's tech heavy. I don't want a tech heavy webs. The S&P is plenty diversified and plenty of tech in there. So, Chibism, you didn't come back to me. I'm talking to you. I don't see you. All you have to do is say, yes, I'm here. Chippism, are you here? You become a member on both channels, and I'm trying to do something nice for you, but I don't know if you're here. So I can't do it until you say, yes, I'm here. We'll have to do it another day, I'm afraid. That's a shame. That would have been a great moment. But never mind. It doesn't matter. We can't do what we can't do. Don't care about what you don't have. Care about what you do have. Right, I'm going to get off then. I think I answered everyone's questions. Let me just end this by saying, let me end the poll. 87% are joining us here for the earnings. Here is a poll that we're running at the moment on NVIDIA. On X, will they beat or miss? Again, if you engage with me on X, I engage with all of you. Here's my X account. Beat. 85% think they will beat. Okay. There is X if you want to do that. Okay. Let me scroll back out of there. Okay. So I'm going to wrap up the show now and send everyone like magic to the extra channel so you can all be part of that while I finish off this evening and wrap up. I'll be back in the morning for the opening bell and then our interview with Jefferson Boots. Sadly, we didn't get to hear back from Chippism. Never mind. I think I've answered everyone's question. Yes, I have everyone's question. Right, so just before I go, I shall just give you this last link. If you like Seeking Alpha, I always bring the best deals, always, otherwise I don't do it. You can now get a free trial. You can't get a free trial without my link. There's my link. And you get 25% off, $25 off. You can't get that without my link. I've also know the CEO of Alpha Spread. Here's the free plan. I use it every day. Or you can get, if you're a member, you get a discount, which basically makes my membership for free. Okay, there's that. If you want some free stocks from Robinhood, up to $575 stocks in the UK and the US, there is that. If you want to be part of my gold card promotion, I am paying I'm paying your gold membership for 4 months for the people that sign up with gold and verify the last 2. That's it. If you all do it, I won't be paying it. I just need 2 more to get to 10. Then I get a solid gold card. I'm going to melt it down and give everybody 4 months of gold membership. I'm going to give you cash back. You got to verify you did it, and I've got to get the gold card before I can do it. So if you do that, there you go. Somebody super chatted a question before the call, if you remember. A question, what was it? Somebody super chatted a question before the call. Was it you? I mean, how am I supposed to know? Martyn, do you believe NVIDIA... Antonia, Martyn, do you believe NVIDIA will soar after earnings? Yes, I do. I do not think it's going to $200 straight away. I think it's going to take 12 months. I do think it's going to go to 130, 140, 150. I can't be precise. Doesn't matter to me. I own it. I wouldn't be buying it now. I wouldn't be chasing it now. I own the S&P with it now. That's the better way of buying it. I own about 15 grand of NVIDIA through the S&P or something like that. And I'm very happy with that. And that's it. I think that answered your question, Vaz. Sorry, not Vaz, I beg your pardon. But the person that answered it. Thank you very much for reminding me. Thank you very much, Vaz. And by the way, Vaz, I haven't forgotten you. I know you've sent me a video. I have looked at it. I've got to come back to you. It's been earnings season. I've been flat out and I've not been able to deal with it. But I will I haven't forgotten. I never forget. It just takes a while sometimes, and I'm sure you appreciate I'm getting busier and busier, but I never forget my members, and I won't forget you. Okay? Just so you know. Everyone, no one gets left behind. Nobody. Right. Okay. We're going to wrap up the show. Thank you very much indeed. What we're going to do now is just to introduce you all to the extra channel. I'm going to send you there right now. You haven't got to do anything. It'll automatically take you behind the scenes to the extra channel. Hopefully you'll just pop in and say hello. Let me do that now. There you go. I'll give you the link as well if you want to pop in. Remember, it's 99 cents if you want to. I'm patient. You'd bloody need to be, wouldn't you? Waiting for me. It's like waiting for bloody Father Christmas once a year. I understand it takes a while. Right. I literally have about 10,000 emails. I mean, it's a day. I mean, it's hard. It's hard doing it all on your own. All right. I won't lie. Okay. That's it from me. Thank you ever so much indeed. Thanks for joining me. I hope you all enjoyed this event. Another what I do while listening to ML in Discord breakfast bar. Hang on a minute. One of our members wants to share something in Discord. Breakfast bar. What I do while watching Martyn Lucas. What do you do? Another what I do while listening to Martyn Lucas in Discord breakfast bar. I'm in the breakfast bar and I don't see anything from Stacey Bailey. Stacey, I don't see anything from you. I'm in breakfast bar right now and I don't see anything from you. The latest one is James James, Mike. Nothing there from you, Stacey Bailey. I'm not sure what that's about. I know you had snakes a few days ago. We did that, but I don't know what that might be then. Oh, there we go. What I do while listening to Martyn Lucas Investor. There you go. Look at this. Isn't this beautiful? Well, while Stacey is listening to my show, she's out there with her ponies and her horses and all the rest of it. She's got all her bloody power tools. Look, bloody hell. Let's have a look at the horses. Look at this. This is what's going on right now while Stacey Bailey is listening to me. I wonder if there's audio there. There you go. I tell you what, Stacey, that looks fantastic. Oh, I love that. I miss the green fields of England. I know you're in America, but I love that. I love this. This is great. While listening to me, is that animal cruelty? What does everybody think? What do you reckon? Animal cruelty? Chasing my horses around the place. I love it. I'm only joking. She knows I'm joking. Right, there you go. I love it. There you go. There's the community, the family over there on Discord. Love that. Bust out the chainsaw and the horse pasture. I love it. No wild Mustang in the UK. No, you're right. There's no wild. In fact, we do have wild horses in England on Dartmoor and Bodmin Moor where I live. So we do have wild horses. So put that in your pipe and smoke it. We don't have Mustangs, but we do have like old knackered, Dartmoor ponies, which are tough as boots. Yeah, so they're not all agile, but like a Mustang, but they're hardy English horses. Anyway, I'm out of here. Thank you very much indeed. Appreciate you all. Love you all to bits. It's now time for me to spend the evening with my wife. No earnings tonight. See you back in the morning. That's it from me. Thank you very much for a really great evening. We had, how many did we have with us tonight? We had, look at this. We had 1,966. Look at that. One of our best ever closing, I think probably is our best ever closing bell. Nearly 2,000 people joined us tonight for this special event. That's it. That's it. Have a lovely evening. I'll see you all back in the morning. Join us in the morning for Meet the CEO. If you want to be part of that, you want to speak to a CEO of soon to become a publicly traded company. Stacey Bailey, I know you're interested in this one, so join us in the morning for that and everybody else. That's it from me. Thank you very much. Stay right where you are, and I'll take you right now to the extra channel. Check it out. Pop in and say hello. See behind the scenes. See you back in the morning. As always, animal cruelty and child abuse. Absolutely. It's all happening now, Stacey. As always, take care of yourselves and each other.